call the meeting to order at 7:01. And with that, I will open the floor for nominations for board chair.
I'd like to nominate Jeff Clark to be chairman of the East Granby Board of Finance.
Second. Any other nominations? I have a motion to close nominations.
I'll make a motion to close nominations.
Do I have to, when I start the meeting, note that Jeff's the voting member? Or do you do that when the meeting starts?
I thought I heard you do that.
You should note it now.
Okay. You guys all heard it, right? Yeah. Thank you. Okay, so we have Jeff. Okay. All those in favor of closing nominations?
Aye.
And all those who vote for Jeff as board clerk, sorry, I'm trying to quit, Jeff.
Board, no, that was,
Board chair, please raise your hand.
Aye.
Okay, voting unanimous, congratulations.
nominate Kelly as vice chair.
And now I'll open the floor for nominations for vice chair.
We can circle back to that.
Yeah.
Vice chair? This has never happened before, so.
Let's try again next month.
Okay. With that, I will turn the meeting over to Jeff.
Okay, thank you. And thank you, members, for your faith in me. I'll live up to it. All right, the first order of business is public comment. Is there any public comment on the items on the agenda?
Items on the agenda?
Yeah. Do we have anybody on Zoom?
Did.
Four people?
Yeah, we have one person.
Any comments there?
Do I want to be vice chair? I'm just kidding.
Okay.
I'll stop.
All right. Hearing none, are there any additions to the agenda? Okay. And next item is we have a vacancy on the board. Are there any plans to fill that vacancy? I'm not aware of any. We can appoint that person to be vice chair.
Don't tell
Just
them.
don't tell them. All right, next item is acceptance of the November 18th minutes. Is there a motion?
Make a motion to approve the minutes as submitted.
For a second? Second by Todd. Any discussion? All in favor, say aye.
Aye.
Aye. Anybody opposed? Abstention?
Were you here?
I wasn't, but I think we had previously identified that I could still accept.
Still vote for minutes?
Yeah.
Oh, is that the way it works? Oh, I thought,
You can see it, you can watch it online.
Yeah, you don't have to be present.
okay.
Jeff? What we were just noticing on the agenda is that the auditors are not there.
So in addition to the agenda, is the auditor's presentation?
8A. It is there.
Okay.
Oh,
Yeah.
yeah, sorry. Thank you.
Okay, communication and correspondence. For me, I heard from the assessor that we have favorable news on the supplemental motor vehicle list for FY25, but we can expect favorable news of close to 190,000. We received, and on the agenda tonight is an update to the capital policy that was launched by a comment from a member of the public who suggested a checklist at the last meeting when we had capital. So we took most of the items were already in the policy, but they were sparsed in the paragraph here and there. So there's now a checklist that we'll review later. There's a fire study meeting on 2/5, and if anybody can join that, I can't be there this quarter. Received RCC data that I provided to the board. Received that from the first select woman. There was some back and forth on the sewer fund, which is on the agenda. And I've had some communication and attended a meeting on a solar fund that's going to be, have some more activity with the Board of Selectmen later this week. Is there any other communications, correspondence anybody wanted to share? All right, new business, and with that, the much wanted item 8A, review and discuss the 0304 audit.
All right. Thank you very much. My name is Mike Nevenker. I'm a partner at Mahoney Sable, ultimately responsible for overseeing the audit work and issuing reports on behalf of the firm. Joining me this evening is Heather Seidman. Heather is a supervisor at the firm, ultimately responsible for the day-to-day execution of our audit procedures. So hopefully by now everyone's received electronic copies of the reports that were issued in connection with the audit. Again, as part of my presentation, I won't go through those in detail. But I do provide really an overview of the scope of work that we performed, the reports that were issued. I'll provide some financial highlights, make our required communications, and certainly if you have any questions, I'll be happy to answer those. So turning to the PowerPoint presentation, if you can turn to slide 2. As far as the scope of work, no changes from what's been performed in prior years. We did do an audit of the town's financial statements in accordance with both the auditing standards issued by the American Institute of Certified Public Accountants, as well as the government auditing standards issued by the Government Accountability Office. In addition, based on the level of federal and state funding that was received and expended by the town, we did perform both federal and state single audits. We also performed a agreed upon procedures engagement on the end of school year reports that are filed by the school district to the Department of Education. In addition to those attest services, we also perform some non-audit services for the town. So we do assist in the preparation of the financial statements, schedules of expenditures of federal awards, state financial assistance, and the related notes. We also assist in converting the town's government fund financial statements to the government-wide financial statements. In addition, we do assist in the preparation of certain trial balances for special revenue funds, which are currently not maintained under the county system. In order for our firm to be able to perform those procedures and remain independent of the town, management is required to oversee those services and ultimately accept responsibility for them. Again, Kelly Jacobs is the treasurer, and Mary Kinney, the business manager, ultimately have accepted responsibility for those services. In connection with our audit, we do issue a number of reports. In regards to the report on the financial statements, we did issue unmodified opinions on the financial statements. Again, an unmodified opinion is expressed when we've concluded that the financial statements are presented fairly in all material respects in accordance with accounting principles generally accepted in the United States of America. I do like to point out our opinion does provide reasonable assurance that the financial statements are free from a material misstatement, whether due to error or fraud. We do not provide absolute assurance. We do not test every transaction. The financial statements do include some estimates, and therefore we do not provide absolute assurance. But again, reasonable assurance is still a very high level of assurance. In addition to the report on the financial statements, we issue a report on compliance and on internal control over financial reporting. To read this report, we don't actually express an opinion on the town's compliance with laws and regulations or on the effectiveness of the town's internal controls. Essentially, during the course of performing the financial statement audit, we identified what we consider to be material non-compliance with laws and regulations, or a significant deficiency or material weakness in internal control, or required to include it in the again, we're not reporting any such thing. In connection with the federal single audit, we issue a report on compliance at the federal award level. So in this report, we do actually express an opinion on the town's compliance with your major federal programs. For fiscal year 2024, the total federal awards that were expended by the town was just over $1 million. The major program was the coronavirus state and local fiscal recovery funds. We did issue unmodified opinions on compliance over that program. And again, no significant deficiencies or material weaknesses were reported. We issued a similar report in connection with the state single audit. For fiscal year 2024, the total state financial assistance that was received and expended by the town was about $5.5 million. A portion of that is considered exempt from our testing, which primarily consists of the education cost sharing funds. The portion that was not exempt was just over $3 million, The major programs were the Town Aid Road Grant and the Municipal Grant Aid. Again, we issued unmodified opinion on compliance with those programs, and no significant deficiencies or material weaknesses were reported. Again, in terms of our compliance work, a lot of the main compliance requirement is allowable cost. So we do a lot of testing to make sure that what you're charging to those grants will allowable. Next section goes over some overall financial highlights. First slide talks about your general fund budgetary highlights. So again, for fiscal year 2024, the original budget did contemplate the use of fund balance in the amount of about $730,000 to balance your revenues and expenditures. During the year, an additional appropriation of approximately $61,000 was made from fund balance to transfer the prior year budgetary surplus for the Board of Education to the Board of Ed non-lapsing fund. So that resulted in an overall planned use of fund balance of about $794,000. The actual change in fund balance was an increase of about $1.6 million. So that resulted in an overall favorable budgetary variance of about $2.4 million. That was really driven by a revenue and other financing sources surplus of about $2 million. You did have favorable collections on property taxes, state aid, building permits, interest income, and then this also included a unbudgeted transfer in from the elementary school renovation fund that was authorized subsequent to year end, but it was reflected in the financial statements as if that transfer happened as of June 30, 2024. And then overall, your expenditures were approximately $383,000 less than. Next slide goes over your governmental fund financial highlights. So again, this includes your general fund on a GAAP basis, as well as all of your special revenue and capital project funds. The combined ending fund balances for the town totaled approximately $11.3 million. That was a decrease of about $778,000 from the prior year. Of the $11.3 million, approximately $6.1 million is included in your general fund. Again, that was an increase of about $1.6 million from the prior year. Of the $6.1 million, 3.9 was considered unassigned, and that represented approximately 14.2%, or about 1.7 months of your fiscal year 2025 budgetary expenditure appropriation. So again, that does fall within your fund balance policy, which is between 10 and 15%. One item that I did want to point out this year, we did reflect a portion of the general fund balance as being non-spendable. That amount was about $696,000. Again, that represents some working capital advances that have been made to the sewer fund. So again, because those funds have been expended to pay cost of the sewer fund, they're not available to be appropriated within the general fund at this time. So again, that portion was reflected as being non-spendable. And then you had about $1.2 million that was assigned for use in your fiscal year 2025. In terms of your sewer use fund, that is reporting a deficit of about $992,000. That was an increase in the deficit of about $262,000 from the prior year. Again, that deficit does not include additional expenditures of approximately $631,000. Which have been incurred as of June 30th, 2024, that are payable to MDC monthly on a long-term basis. So again, there were some retroactive billing adjustments that were made by the MDC and the Connecticut Airport Authority. Management did negotiate to pay a portion of those expenditures over a 3-year period. So again, that portion has been classified or reported as being a long-term liability. So again, it's not reflected in the sewer fund or the current deficit. That will be recognized over the period. So again, we do continue to recommend a formal plan for addressing the deficit, and that ultimately be evaluated in line. And then all the other funds of the town had a combined ending fund balance of about $6.2 million. That was a decrease of about $2.1 million from the prior year, and those amounts are either restricted or committed for specific programs or purposes. Again, there are detailed schedules of each of the town's funds within the financial statements. The last section goes over our required communications. The first item here talks about our responsibility under our auditing standards. Although we assist in the preparation of the financial statements, they are the responsibility of the town. Again, it's our responsibility to perform our audit procedures and express our opinions on those findings. In terms of the plan scope and timing of the audit, again, no changes in the overall scope of work or the timing from what was originally agreed upon. And again, all reports were filed by the statutory deadline. In terms of significant audit findings, we would typically communicate any new accounting standards that were implemented by the town. Again, there were no new accounting standards that were implemented that had a significant impact on the town's financial statements this year. As mentioned before, the financial statements do include some significant estimates and judgments. Those primarily consist of estimating useful lives and assigned capital assets, and then discount rates that are utilized to determine the school district's total OPEB liability. Again, we did review those estimates. We did deem them to be reasonable and consistent with what other municipalities are utilizing. Again, I do want to point out, as disclosed in Note 10 to the financial statements, the sewer use fund is reporting an unassigned deficit, which will ultimately get permanently funded. I'm happy to report that we had no significant difficulties encountered in performing the audit and dealing with management. We had no uncorrected misstatements, so any audit adjustments that were identified were proposed and reflected in the financial statements. We had no disagreements with management. We did obtain a management representation letter. Again, there were no uncommon representations that were requested by us. Again, just give the board members an example. If we were unable to substantiate a transaction that we selected for testing and we were relying on representation for management, we would disclose it. And again, we're not aware of any management consultations with any other independent accountants. If you did consult with other accountants on financial reporting matters, we would have to have a conversation with those accountants, and that would have to be disclosed to the board as well. And then the last item here was just some overall internal control recommendations. Again, we did issue a written management letter this year. Again, just for the board's understanding, there's 3 levels of findings that can be issued in connection with an audit. There's a material weakness, a significant deficiency, and then other deficiencies or just best practices recommendations. Material weaknesses and significant deficiencies require corrective action plans to be completed and submitted to the Office of Policy and Management. These other matters can just be addressed internally by management. So again, in terms of some prior year recommendations that are carried forward, we continue to recommend maintaining all funds in the accounting system. Again, we implemented a new accounting system this year. I think the plan was to kind of implement other funds over time. So again, we continue to recommend that all financial information for all funds be included in the general ledger. We continue to recommend the town performing a fraud risk assessment process. Again, that would really require town officials to look at all of your various processes and identify potential fraud risks, and then the controls that you have in place to address those risks. Again, the recommendation is that this is not done in 1 year, but maybe you look at a couple of departments each year. And again, that should be internal documentation that you maintain to understand your risks and what you've done to address those risks. In terms of current year recommendations, again, we did have the formal recommendation to address the deficit in the sewer use fund. And then also, the town is required to implement a new accounting standard next year. GASB statement number 101 on compensated absences. Again, we'll provide management with some templates to assist in implementing the new standard, but again, we just put it in there because it could have an effect on the town's financial statements next year. So with that, it really covers our required communications and the reports that were issued, and again, happy to answer any questions from the board.
Anybody have any questions?
Yeah, I have a couple. So regarding the fraud risk assessment process, is that something that is generally done by an outside consultant? You're saying you referenced something internally. That seems kind of...
You can certainly hire an outside consultant.
Yeah.
That process can be very expensive.
Well, that's kind of where I'm going. Yeah,
and
right.
Sometimes you don't necessarily get what you're looking for.
Right.
It certainly can be something that can be done internally. And again, it's really just looking at your processes, identifying potential fraud risks, and then identifying the controls that.
It's just not, such a small pool.
Yep.
It's kind of like the same people are doing the risk assessment that are, for lack of a better word, creating the risk, right? So it's kind of difficult.
Yeah.
I was
Just
just,
I mean, we do a risk assessment process.
Right.
Ours is more towards a material misstatement of the financial statements.
right.
So again, we don't look at everything. So this would kind of assist the, in looking at some of the lower risk areas.
Is there a best practices for that sort of thing for like smaller towns where you can't afford to have or is it just, you basically described that?
Yeah. I mean, you would just, you'd use Excel and identify the different systems, but I don't think there's a specific template. I could,
One other question I had. So the 695 report is a non-spendable. I don't remember seeing that before. Is that something I don't remember seeing that in a former highlight, okay? That is money that was collected and we can't spend on anything but. Is that what you're referring to?
The general fund maintains basically a cash reserve,
Right.
which gets broken down into, if you assigned it for use in next year's budget or your unassigned balance.
Unassigned or assigned, yeah.
In this case, because those funds have really been used to pay expenditures of the sewer fund and aren't expected to be repaid to the general fund within the next year, again, our proposed accounting was to treat that as being non-spendable. So again, because if you wanted to appropriate those funds.
Because technically it's a deficit at that point.
Correct.
Okay. All right. I just don't remember seeing that in previous year. Thank you.
Certainly, it with the significance of some of the retroactive billings and the increase in the deficits,
Right.
I think it's more clear that that's not going to get repaid within kind of the next year's period of time.
Okay. Thank you.
With regard to the unassigned amount in the general fund, you put in there what percentage that represents the general fund, 14.2. Is there a recommended percentage you have for towns our size and where to keep that?
So the GFOA provides the best practice recommendations. Their recommendation is that all governments, regardless of size, maintain 2 months worth of reserves. So that would be roughly 17%. The old benchmark was 10 to 15%. That being said, you do have other reserves than just your unassigned. You do have capital reserves that should be taken into consideration as well.
Now, can you ever, to my recollection, taking capital reserves into account?
And then, in terms of an overall policy, you would also kind of evaluate the risk. So if you were a shore town and there's, an increased risk of flooding and those sorts of things, you may want to maintain a little bit larger of a reserve overall.
So the direct effect on our bond rating too, correct? I mean, that's kind of something they take into
They
account.
do take into consideration. They like to see the policy and, what you do if, you go below the policy amount. But there's a lot that goes into the bond rating. Fund balance is just one small aspect.
That just segued into my question that popped into my head, which is, does the sewer issue, would that potentially affect?
So I don't think it would, I'm not a, I would do
You're not a bond writer?
Right. But, again, as long as you're developing a plan and you have something to address it, that's what they're.
Okay.
Any other questions for the audit team? Thank you very much.
Happy to answer questions if you have at any time. Just if you want to filter them through Lisa or Kelly or Eden, we'll be happy to get back to you.
Great, thank you.
Thank you.
I do have a couple of questions for some of our folks who are, while we're on the budget, or while we're on the audit, excuse me. Kelly, one question I have for you, the split out of the general fund that was shown in the audit by, what do you call it? Unassigned, non-spendable, assigned to future year. Is that something that is reportable? Like that you could report on if we wanted?
I mean, I don't, like with our current accounting, that I'd have to
Yeah.
manually
Oh, okay.
just take what's at year end and deduct it from the full, I just have to split it out, but it would match.
Yeah,
Like the assigned and, so I don't know how helpful that would
yeah, to me, it'd be more helpful, I think. It's the first time I've seen one of these categories, but as,
And remember, that's GAAP basis, we don't do GAAP, we do budgetary basis, so it necessarily wouldn't,
okay.
like my numbers from the GAAP perspective are, from my ledger are different than what the. So,
Maybe I'll talk to you offline and just figure out if there's anything. Where I was going was if we were gonna do something that was gonna designate money unspendable, all of a sudden, that would be the time where I'd want to go. Sounds like, yeah, let's do an offline conversation, figure out if there's anything there. My other question was around the, maintaining all the funds in the accounting system. I know we finally got to the accounting system, I think, but is there any plan, like Missy or Kelly, to bring them forward? And should there be?
so I think it just relates to the town side, right now,
Okay.
it does not affect the side at all.
Okay,
So, not right now. We have a lot of the funds that are like the round fund for the park and rec, Halloween fund, they're very small funds that don't do anything. It would require somebody who currently doesn't have access to our general ledger to have access to the ledger to make your entry. Or it would be, I'd be recording everybody's, all of those. And so I guess it does include the schools a little because it's some of the high school.
There are some, yep.
yeah,
So, I don't know how that would get implemented, just because of all the, those department heads handle those funds. There's people at the high school who handle their funds. They don't have access to our general ledger. So when they go to make a payment, they're not cutting it out of our ledger. So it would just.
So they have their own individual account that they work from?
Yeah, like they just maintain like a spreadsheet or something like that. And then what the auditors have to do is take basically the bank statements and do all the ins and outs of those sub accounts from that. Most of them are very small.
Limited activity.
Activity.
Yeah.
So
all right.
we've talked about it, but we definitely said put it on the back burner for the new accounting software, and then just kind of my preliminary thoughts about it. I'm not sure how we would incorporate that.
So is it like a manpower thing? Like it would be completely taking you another 20 hours a week to put all these numbers in? Or is it just like a communication type thing?
I mean, it would just require somebody to enter all those individual transactions for all of those funds.
So if you bought cookies for the
Correct.
Halloween party.
Somebody
Right.
have to make a general.
So just out of curiosity, how is that's all paid through your checkbook?
No, like they have Brown funds they have their own bank statements.
They have their own
bank
account.
accounts. Correct.
So is there a threshold that you use for that? I think what you're talking about is best practices, right? How to establish, and to your point, I mean, you said they're very small, but this is the one time a year we really talk about this stuff. So it's kind of like, what is the threshold for that sort of account? I mean, you obviously don't have $1 million in a Halloween fund.
Correct.
Yeah.
I don't think we have an internal threshold. I think it was just divvied out by department. It makes the most sense. Like if we're running a park and rec program, people pay for the program, and then out of those funds, you pay the instructor to do the program. So it's a round fund, but it does have a balance, but there's a bunch of ins and outs that
So
goes.
the only reason I ask is I have a small business, relatively small, and everything that gets done, generally I'm looking at, but I can't see everything. I can't pay every bill, and when I pay it, but then I have an account that looks at it. Then an account, bookkeeper, secretary, and me. So there's 3 people that are kind of like, hey, what's this? The way you're describing this, and maybe I just need more clarification, is they have a fund, they have a checkbook in Parks and Rec. And the head of Parks and Rec buys cookies. So she writes a check or whatever. Maybe they have a debit card or whatever. They pay for that. Does anybody ever look at that and say, okay,
Well,
you do?
I have to sign off on it.
The checks.
So there are three people like,
Well, we look at them. Yeah.
so each one gets like
They all
initialed
get
or whatever?
Yeah.
Okay, well, that's,
The supervisor of the department does. There's no supervisor. They are.
so there have to be like a cookie conspiracy for this to get through three people. Yeah.
So it seems like, sounds like there's real obstacles that, while, it's a great goal, there's real obstacles or things we wouldn't want to do. If we do get into the fraud risk assessment, that's going to answer, like, it's going to bring up that specific question and we'll find out that maybe there's nothing there or if there is with you.
And none of them individually are material to the town as a whole, so there's no real
Right.
financial risk to the
Sure.
town.
Okay.
Somebody fraudulently bought cookies.
Probably a bad example, but you can. Yeah.
No.
don't know. They shop at Costco. You should see how big the carts are for Halloween.
There are 2 signatures on every invoice that was used.
Really? Okay. Yeah. And you have a treasurer lady that works or a bookkeeper that works in your office, right? Does she
House
have
clerk, yeah.
house clerk? Yeah. Yeah.
She doesn't review that. It's either me, Kelly, or Rosalie that review. It's me and either Kelly or Rosalie that sign off.
Oh, okay. So this, yeah, that's different sets. Yeah,
Thanks.
that makes me
Okay.
feel better.
How many accounts are you talking about? Because this is also internal controls too. How many accounts do you think are- Top of your head, 20, 30?
Would have been a good
15?
question. for Heather.
Christine,
maybe?
Less than,
I'm wondering if Christy can like slowly do it month after month and then just do like a month-end journal entry based upon what they have on their bank.
based on the
statements or something.
activities, you could do it quarterly, like there's, internal control, talking about internal controls is yes, it kind of provides that overall oversight, even if someone's doing it on a quarterly basis.
Mhm.
But then also just from my perspective is you want all your financial information in a system. That way, if there is transition, somebody that comes in, all the information's there, so they can just run it from the general ledger.
And then you were asking about your
Funny.
fund balances and everything comes together. You haven't seen that before because everything was separated before. So this would all kind of add up to that.
So the software we have, like, can you incorporate that? Like, if the people in the individual departments were to keep in a sub file, could somebody literally go in and just incorporate that quarterly or monthly? No, you don't want anybody touching that, do you? I've gotten that look from a lot of bookkeepers.
Well, I guess it's not for us to solve, but.
Yeah, I mean, again, it's cost benefit analysis that ultimately we have to do. We'll give it as a recommendation every year. Again, if these were material accounts with lots of activities, then it wouldn't be a recommendation. It'd be a significant deficiency or material weakness. But again, just something to consider.
Sure. Thanks. Last question I have, Kelly, I keep putting you on the spot, but the GASB 101, are you familiar with it and what it's going to mean to us for
No.
this year? Oh, I should have asked the audience. What is that in a nutshell? What is that?
So the current GASB basically looks at different types of leave, and the requirement for how that gets accounted for is based on the type of leave. So how you accrue sick time is different than how you accrue vacation time.
Mhm.
So the new standard just kind of looks at everything together. It doesn't matter if it's paid time off, sick time, comp time, vacation time. They want you to develop a liability based on what you would expect to ultimately pay out. Whereas-
Like a prediction?
yeah, they want you to do a prediction.
Okay.
Everyone were to walk out, what would you have to pay?
Everyone.
Oh, so like worst case scenario, that is. So
But not even that. So right now, under the current GASB for sick time, you would only accrue a liability if there was a termination benefit to it,
a legitimate.
a legitimate
Yeah,
termination.
yeah.
You wouldn't accrue for sick time for the person to get sick 2 years from now. You know what I mean?
Right.
Now they want you to consider what's the likelihood that they're going to get sick and how much time would they use, and put that on the books
Over what period of time?
as they earn it.
Oh, the potential for total liability.
Correct.
Kind of like what they did with pensions a few years ago
Yeah.
when they started, yeah.
That's like
Again, just a
vacation,
little,
it comes out.
what's
Then if someone takes the sick time or vacation, it comes out of the accrual.
it does, but it's all government wide,
Yeah.
you know, so it doesn't affect your budgets. It's really a full accrual, you know, conversion entry that has to be done.
Well, much of that is already forecast in the salary, right? I mean, where's the real, I guess that's what's the real liability, unless it was like a termination bonus.
Yeah, just so like, you know, sick time, if somebody earns sick time this year, they can take it next year.
Right.
When they take that sick time, they want you hitting the liability because they earned it last year. They want you to recognize the liability for that time that they're going to take.
They'll carry it forward. Okay, now that makes more sense, yeah.
Right. Now, assuming you're not paying somebody else to do that job, it doesn't cost you any money.
Right.
It's just a timing issue.
But there's a potential
But there's a
liability,
potential liability.
like a police officer or something like that, yeah.
Does that impact schools too?
It does.
Because there you hire, somebody's out, you hire a superintendent.
Yeah.
They got a lot more.
You hire a
The
substitute.
schools have a lot, you know, I don't know if it's going to be off the top of my head, but schools have a lot of sick time that isn't payable upon termination. So a lot of those liabilities that never got picked up will have to be considered.
So Kelly, do we still allow accrual, or is there a use it or lose it policy now on vacation? Sick time?
So sick time, you have to, just take it, you don't get it if you terminate. There's no payout of sick time.
Yep.
Except for sure.
And then,
But if they accrue 5 days this year, does it roll over into the following year, or is there a cap?
yes, it keeps rolling.
Okay.
So that's what you're talking.
And vacation, you get paid when you terminate whatever you've accrued.
But is that carryover as well, or is there a?
Carry over 1 week,
Okay.
that's it.
Same with sick or is
That was
still limit?
Sick accumulates. But you don't get paid if you.
Excuse me, you're gonna
terminate, you
get sick
don't
for the last
paid
3
your
months you're here.
vacation.
Basically.
It becomes like a short-term disability.
Exactly.
Right.
Okay.
All right, anything else about the audit? All right, thank you. We'll move on. You're welcome to stay as long as you like. And
I was going to stay, Lisa asked me to stay for the capital.
okay. For the capital policy? Okay. Do we want to do that next in the interest of your time? So I'm going to skip to the item 8D, the capital policy. In your packet. I don't think it is. So we received from a member of the public around the November meeting, I don't know if it was right before or right after, but she asked us to consider putting a checklist together for approving capital. And so we do have a policy out there, and there are a lot of guidelines, as I said earlier, that are in the text of that policy. But if you don't know what's there, it's not clear what we're looking for. So what is on the agenda tonight is a proposed policy change. I don't know if I have an actual copy for you to look at, Mike, but
Yeah, share this mic too.
and really the only change I've made to this draft is the checklist, which is at the end. So basically, I broke it down. Items where the desired answer, kind of a yes/no. Items where the desired answer is yes. Items where the desired answer is no. And then items that are informational. There's, I guess, a dozen items on this list. So under the yes category, is the item on the capital plan for this year. The part of our policy says we're going to be pretty clear about what's in this year, kind of clear about next year, and then the 3 out years are a little more gray. So if it's not already on the plan, doesn't mean we won't approve it, but it's just the most desired situation is, yeah, it's on there. If it's not, well, why? It's an opportunity, it's an emergency, it's a whatever it is, which is actually 1A. Or is there a swap out of a similar cost? Next one is, are there 3 quotes? If not, why not? So we'll just lead with that, because we have many times where we don't have 3 quotes because we can't get 3, or we've got quote from a state authorized vendor. You know, there's various reasons why we don't need 3, but if we don't have them, let's include that in the submission that says, here's why we only have 1 or 2. Our policy, I know we've gone back and forth about what threshold a capital item is. And when we put the policy together originally a couple of years ago, and we were arguing over, is it 5,000 or 10,000? And the compromise was, we're going to enforce 10,000 with FY 27. So it's 2 FYs away, but that's what the policy said. So the question is it greater than 10,000? It's actually desirable before then that it be greater than 10,000. But just a matter of getting small items out of the capital account. And does it have at least a 2-year useful life? Does the item have a two-year useful life? So those are things that, if the policy is passed, those are express what we're looking for. Obviously, if the answer is no, we're not going to pre-vote on these 2 policies, so it's still going to be a discussion. Items where we want to know, did you lump a bunch of items together to get to 10,000? You know, I got, 10,000 $1 cookies. You know, we're not going to, we don't, there are some places, and having said that, we have had packages that made sense that came in at a little above, but things all went together.
Stuff you'd buy in bulk,
Yeah,
like 10 computers at a time.
yeah, exactly. Could the request be considered yearly routine maintenance? If it is, we really want that in the operating budget. Is this a repetitive item not otherwise accepted in the Board of Finance capital policy? So it's not quite yearly routine maintenance, and we've accepted things like police cruisers, fire apparatus, things like that. But is it something that's going to come every 2 years? Again, we would have the discussion. Is there a grant that could be used for this? Typically, you guys come with capital requests. You've already said, we're looking, we looked at this, that, and the other grant, and they didn't come in, but just it's something we think about. Informational. Now, this is duplicate, but what grant programs have been investigated? So you can say no, and we looked at X, Y, and Z. Can this request wait till June? I mean, one of the few levers we have when the fiscal year starts, against the risk of a bad financial situation is not spending the capital account. So ideally, I want to spend the money as late in the year as possible. That way, if something comes up, we have money there. So I do want to ask that question. Now, in the years I've been on here, there's a ton of good reasons not to wait till June. We need to have this done in the cold weather, if it makes sense. Or in order to take advantage of the summer for the schools, we have to do this, that, the other up front so that come May, they can start fresh or whatever. So there's good reasons, but my default thinking is let's do it in June. And then what's the implementation timeline? Just some sense of when the work would be done. So those are the things we put in there, and I just want to open for discussion if there's any comments, people want to have additions or changes to that. I guess we need a motion. Especially.
I can wait till they have a second and have a discussion.
Make a motion. I think this is great what you put together. So
I guess I do have a question.
Okay. Before we have I need
I have a second.
Okay.
Motion to approve it.
Yeah.
Discuss.
Motions to approve the capital
Yeah,
policy?
right?
Yeah.
Is that what you,
yeah. What we're doing.
I'll second.
Okay.
Yep.
All right. Go ahead, Jim.
So, I think it makes sense, right? Because if you're gonna have a big document, it's good to kind of take you to something that says, like, here's the little items that check out. But I guess my question resides in, like, how do we use it? Or is it used for anything? Like, is it like a decision matrix that says, you know, like, I said yes, 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 that means something. Or I said no, 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 no.
You mean, is there a
What does that
weighting of
mean?
it or something?
Yeah, like,
Yeah, yeah.
so we have the checklist, but I guess my
Pass it.
my point is, right, is so if you have something, generally you have something for use. So how do we use the checklist?
So is this similar to the issue that we ran into with, like, people would come in and ask for a capital request and we had to say, did you do these things? And they said no. So we said, come back later, come back and get those 3 quotes. So we wasted time discussing something that wasn't.
Yeah.
Almost like a checklist to make sure that we have all the information in
Yeah.
order to discuss it.
I don't want it to be a decision matrix. I want it to be useful information for people bringing capital requests to us, for starters. Secondly, it represents at least some of the things we think of in terms of, gee, would I approve this or not? But I don't think you can use it to say yes or no. There's areas of gray.
Yeah.
So from my perspective, I love it because over the years, I've seen multiple situations where there was ambiguity. And that's really frustrating as hell when you're trying to, like, we don't always know the background. We come in here on a night for a meeting. We sometimes get the packages the night before, and we're trying to make sense. And you have different situations where it's like a rushed decision. Like, we got this opportunity to buy this yesterday.
Yeah.
So at least if it's run through this template, you have a chance of, like, capturing some of the information. But it's really frustrating when you're sitting there and you're saying, like I've said 300 times, did you get 3 quotes? You know what I mean? It's like, no, we didn't because of this. Well, if they've already prepared for that question, you don't have to go through that.
Yeah.
And oftentimes there's damn good reasons to get 3 quotes. You know what I mean? And,
Yeah.
and now you can kind of challenge them on that. And then Jeff even threw in stuff like the grants and stuff like that. But that it kind of takes away a lot of, for lack of a better word, ambiguity of the whole process. And it does quantify a lot of the stuff that's in the policy. So, but to your point, I mean, it's not really, and I didn't think you were trying to put it that way as a test, like, okay, this one passed the muster.
Yeah.
It's more like, we're going to need this information to make an intelligent answer or give you an intelligent response. You know what I'm saying? Because there's so many other things that come into play. What's in the capital fund? Are you going to, you know what I mean? Is this like, there's a lot of things. What is the potential risk? Because every year is different. You have all these risks that are popping up. Maybe you want to put this expenditure off. You can't always get that stuff here. But at least the boards, when they come to us, have a fair shot at presenting the information that we're going to be, oh, wait a minute, did you do this? It's kind of hokey the way we've done it in the past. You know?
So I think summarizing, this is a list that says if you can't go through this checklist and have a reasonable response for each of them, you're probably not going to get a vote either yes or no. We're going to send you back to the drawing board.
Or most of them, and some of them, yeah.
Well, I'm saying
Yeah, right.
the ability to address the question,
Right,
not
right.
a yes or just a yes, we got 3 quotes or no, we didn't, and here's why. If they can't address those.
Right.
Then does it say in here that we expect that they use the checklist before they bring in a request? Because then that's, I guess, where I would come, like, maybe there should be something said, you know, like, we expect that you would go through the checklist.
Well, this is becoming part of our capital policy. So I guess that's kind of, I get your point, though, yeah.
And saying we expect is the same thing as putting it out there. It's not, it's still a soft target.
So there is a one line of text that was added to that. It just says the table below entitled East Granby Board of Finance Capital Request Checklist is added to this policy on a monthly day. It can be used as a guide by Board of Finance members in analyzing requests. It provides visibility to these guidelines, enabling requesting boards to meet them. So I think,
So if it covers that, then
yeah, I think it covers it.
Okay.
And
I
I
think
think
we see it on the back. I didn't even see it. Yeah, no.
yes.
Missy Bavaro, Granby Superintendent of Schools. I apologize. I probably just spoke it up on public comment. But I just want to make a point of that. I actually like the checklist. I would have no problem filling it out for each capital request. Very succinct to me, and I'm good at my concern and my question would be we kind of wrap up the pre-quotes because we
Yeah.
know there's always a question. And I'm, as one of the implementers of this, new policy, finding it more and more challenging to get 3 requests, especially on smaller projects and work where there's architecture or creation and design that's required. If it's a piece of equipment, it's typically easier.
Mhm.
So I'm just wondering if there's maybe like a higher threshold. I'm not sure what other districts or towns do. But I'm finding that over the last 2 to 3 years, even more so. And we're spending a lot of time trying to meet that, understanding it's important and the intent and the purpose behind it. But it is becoming more and more challenging.
So I've been asking that question for 15 years, so and I don't mean, but $10,000 to me is a threshold that's reasonable for something like that. But I don't think we've ever, and most quotes we don't get 3, and the board has been very open to that. But at least give us a reason why not, which you just did, which takes 2 minutes to describe. And there are plenty of things. I voted on quotes with 1 quote because it was a guy that did half of it last year. And you're like, okay, we're not going to quote this with 3. Nobody's even going to. And you guys have tried to get, not just you, but the Board of Selectmen have tried to get quotes. I know they put good faith effort in, but nobody's going to call you back on a $5,000 was the threshold on a $6,000 gazebo that you've already quoted twice already and didn't. You know what I mean? There's multiple reasons for it, but it's just asking for a justification, not necessarily expecting. I mean, like I said, I run a business. I don't expect we do. I'm a nut when it comes to it, but you can't do that at the level you're doing it here. So I'd be curious, just real quick, curious to what your thoughts are on that whole threshold, 3 quotes, and the other stuff that Jeff brought up.
So this has actually been kind of a recommendation of the past in terms of the procurement policy. Depending on what the source of funding is, you have to follow the applicable procurement requirements. So if it's federal funding, you really don't have a choice. If it's greater than 10,000, you need to get quotes. You have to get quotes. You can document, like Missy said, that you reached out to these vendors and you were only able to get responses from this, but you have to go through that process. The federal level is 10,000. So again, that would be kind of consistent with the federal requirements.
Yeah.
When Lisa Madden, Finance Director, I think it's great, Jeff. I think it's good we have a policy and procedure in place for it. I like the 10,000 threshold. I like the fact because the capital budget is supposed to be a depreciable asset versus an operating. So as I've been meeting with the department heads one-on-one going through next year's budget, I'm realizing there's a lot of things that are in our current capital budget that really need to be operational. For example, firefighters PPE.
I was going to say, did you get to the
There's
fire
no
department?
way that that's capital, and that's why I kind of have Mike here with me. It's like, that truly is an operating expense.
We went through that. You weren't here for the meetings, but we went through that ad nauseum, and it was a very difficult conversation. But it happened for a specific reason, and that's one of our goals this year. I know it's one of my. I don't know if everybody else here.
But with that, I've been thinking, if we all agree with that, if there's any way that I could respectfully request that, I know you have the budget set for $700,000 for capital this year, knowing that we want to make the shift to operational, can we reduce the capital and increase the operational? For example, when I met with the fire department, there's $80,000 in operational budget of the 110 for next year. It's going to come out. So it's going to reduce it down to 30. But he doesn't need $80,000 for next year's operational budget. It'll be 50. So it's a $30,000 savings for the taxpayers just by doing it the right way. So if I could just ask if you open your minds, if we could reallocate, decrease the capital. This year you had 600,000. And if we're increasing the threshold from 5 to 10, we shouldn't jump to 720, maybe jump to 620, and then expect the operational budget to increase whatever percent plus the 100,000. That was just my take.
Certainly for the subsequent year, for FY26, it's easy to say, let's put less in capital next year and more in operating. If you're talking about doing it in FY25, Okay.
No, it'd be for next year,
Okay.
because the now is when I'm
Thanks.
meeting with all the department heads. They already have all their approvals. You've already done all your town meetings.
Yes.
It would be foolish to go backwards to
Yeah, I
that point. And if we decide to move forward with the 10,000, it's really next year where those thresholds come into play from the 5 to 10.
So any other
May I make
questions, comments?
one comment, maybe a recommendation for replacement when we talk about the 3 quotes, because I hear that concern. Maybe as the auditors were alluding to, instead of 3 quotes, 3 contacts with 3 different companies, and if they decline to quote, at least bringing those and saying, I've reached out to 3 companies, 1 declined to quote, so now I have 2 actual bids.
So that's pretty much what the practice has been. We haven't, and to be fair, I don't.
Right, I'm saying amend. just
Amended
that-
to say, instead of either 3 quotes, or 3 vendors contacted
Yeah.
quotes or something like that.
Well, a no bid counts as a bid.
Yeah.
Yeah.
I mean,
Or
essentially,
it's state.
Yeah.
Or.
And these are still only guidelines, they're not, but just for
Yeah.
clarification, when somebody comes in with a request saying, I couldn't get, 2 bids and a no quote.
Okay.
Or there's only 2 companies that do this within 500 miles. Yeah. Kelly?
This is somewhat directed at Mike. We've had a discussion about encumbrance money. I'm not sure if that should be part of this policy or we talked about it too. When there's encumbered money at the end of the year, there's no policy as to whether that could be used for capital or not. And that doesn't get brought to the town. So when we were discussing it last year, Mike recommended that the board create some type of policy about it. So I'm not sure.
Encumbered for capital purchases,
No.
just
So,
encumbered,
If
period.
my budget has $10,000 that's left at the end of the year, I go buy a piece of equipment with my $10,000.
So to unrestrict the use of those funds,
Right, so that
so it doesn't get spent for no reason.
well, or that.
No, it doesn't go through the capital approval process.
Oh, because it's part of, I get it, yeah. Oh, no, yeah.
For the operating budget.
Can you make a purchase from an operating budget that exceeds your capital policy without having to go to town meeting? Oh, okay, then, I guess.
That's what the issue last year.
So what's the question? I'm missing something.
Does the board want that to happen, or does the board want to put a policy in place, part of this capital that?
So if Public Works have money left over in their department, can they buy something capital related that they would have otherwise included in the capital plan with those available funds?
Oh, yeah, we've been apprised of that many times over the years, and it's often presented to us as no?
Encumbrances don't go to the board.
There is an encumbrance policy.
No, but we've been told, Kelly, what I'm saying
Yeah,
is, like, you'll come in and say, oh, I took this off of
of
capital, because the Board of Ed does it all the time. We took this off of capital because we used our operating budget.
Right.
That's basically what you're describing.
Yeah,
Correct.
Oh, I can get it here.
except it's at the end of the year. But
And if it's not on the
So-
capital.
We have an
Right,
encumbrance
but it wouldn't
policy. I wonder what it says.
Oh, it would never affect it, right.
DPW has 40 grand that's left over at the end of the year and they want to buy a bulldozer. I don't know, just anything, a used dump truck. You're
All
saying
right.
that they cannot be allowed to do that, but that circumvents the entire process you have for capital. So what would the board like to see?
So should we include the requirement for any purchase of encumbered money that's not spent for a capital purchase?
And can it go through encumbrance into the line item versus the capital?
Right.
Well, that is the way we've been doing it, so, yeah. So, no,
That's been the current practice.
the question is, do we want to continue to do that?
That's still
Do
according to
we
capital.
know how much that typically runs each year?
It depends on the savings
Totally.
that the department would have.
Like, do we have historical records on how much?
We haven't typically done
I think
that.
it's tracked.
Last year was the first time that it was, that's why it came up.
Okay.
Because I was trying to understand how it circumvented the entire, like.
It was an exorbitant amount last year.
Okay.
It was what?
It was an exorbitant amount. It was about $40,000.
That was spent by,
That went in through with their encumbrance versus going to capital because it was left over. They didn't spend the
and what
budget.
I
department
think
spent
tires
that?
were purchased.
No, tires we took care of out of fire this year. That was just.
So
for
for
DPW.
So-
I thought it was a truck.
Yeah, so it sounds like we want to look at the encumbrance policy.
That's a good, yeah, so what you're saying is that jumped out at you.
Yeah, I mean, if you want to do it and it's okay with the auditors, that's fine, but maybe it just still needs to go through the approval process of you guys to say, yes, you had extra money in your budget, you want to purchase
Right, you could
it.
add that to your policy to have it approved by the Board of Finance.
So it wouldn't have to go to town meeting, but they could spend it with our approval. So it's kind of like a halfway. So
Correct.
so everything we can put through capital, we have to post, but it would give us a little flexibility to say, if you want this, find it in your budget.
You know, we don't have a big winter, there's a lot of
I
money
think
left
that's a
over in
great
sand
idea.
and salt.
Yeah.
So then you can turn around and the DPW gets rewarded by saying, hey, I've always wanted this item. We didn't have a bad winter. We saved this money that's already been allocated. Can I get a piece of equipment?
I think you're right.
So why don't we,
I just don't know if it should be part of the capital policy.
yeah, let's,
I think it's part of the, I think it's part of the encumbrance policy to clarify.
so I
That they
think what
can
we'll do
do
is get something drafted and bring it to a future meeting, hopefully.
That was just a big, question. Are they even allowed to do this because they're circumventing? So as long as they get your approval, and it works for the auditors, I think that's the best way to do it.
Well, it also falls under we can talk about it when it comes up, but falls under the heading of bad management is not rewarding the department for savings,
Yeah.
but it's also not encouraging to overstate expense so they can buy that truck or whatever. You know what I mean? Yeah. Or
If they're able to save the
I
money,
mean,
they're getting rewarded.
The other option, they could have something on the capital plan that now they can take off.
And it'll
it's a conversation we should have as a group.
Yeah.
Yeah, I agree.
All right, so I'm gonna bring that,
Situation where we have extra sand and salt, it's just the weather. There's no reason to go and spend money just because.
okay, so I'm gonna bring us back to we're gonna deal with that at a future time, but back to the capital policy as presented. Any other questions, comments on that? So we got a motion and a second. All those in favor of making that
Do we
amendment?
have to amend the motion to include the change you just made?
Oh, yeah, we would.
So who made the motion? You did, right?
Todd made the motion.
You want to change your motion to
The change to say quotes or no business.
just,
Do
you'd like
need
to change your,
that in the policy, though? That's more of an internal thing.
no, we,
I was gonna change it in the checklist.
Oh, I see.
So instead of saying we're 3 quotes obtained, say we're 3 vendors contacted for a bid.
the one word,
So moved.
Subject-
I'm just gonna say to approve the
Yeah.
finance capital policy as updated.
Yeah.
That's the
I'll second
original
that.
motion.
Okay,
I'm not gonna do it.
now we have a motion and a second. All those in favor, say aye.
Aye.
Aye. Anybody opposed? Abstention? Okay, so I will get this updated and over to Al Roberts in the coming couple of days. All right.
Thanks, see you next year.
Thank you.
Thank you.
Okay, next item is sewer fund status. What I sent out was just everything is like printed. What I sent out was just a balance of the sewer fund that really helped me pull out the next number of treasury reports. But I wanted to, and I guess the timing's good. I mean, I saw that. I really wanted to use that data to kind of show the scope of the problem, but also
Jeff, do you want me to give a summary of what's happened, or?
yeah, sure. I guess I'll just add, yes, if you can give a summary. I know the first select one put something in the recent Tom Turkey, and also another thing I sent was some plans that she had. So, go ahead.
So, as you all know, I recently just started, so I'm going through the balance sheets, just like everything else, reading everything. And I see the sewer fund, and these big sets of like, what is going on here? So, it's Christie to go through everything. There was a $485,000 bill from MDC on January 11th of 2024. What they did is they took 2 years of estimated bills and changed them to actual readings. Now, actually, they could have gone back 3 years, but they went back 2 years. Our estimated bills were about 13 grand a month. Now they're close to 50. So we have
Closer to what?
50,000 a month
From 13.
from 13 for the estimated to the actual.
From
15 to 50, so here we've got the exact amount here.
Monthly.
Right, monthly,
Okay.
per month. Okay? Then, there's, in addition to MDC, there's the CAA, the Connecticut Airport Authority. They kind of piggyback along because they all use the same meters.
We have a meter pit at the airport that we share.
So is this full town use or is this just general town? Like, is this including, no, but is this including like residents who are hooked up to town water? Is this their use that we're billing
Yes,
them
they're
for?
included in there. They're minimal portion of
Commercial
this.
and
Okay, yeah. I just wasn't sure if it was just town water, or if it was,
Okay, I just want to make it clear, we're not billing for water. We're billing for
This
sewer.
is sewer.
But the water is how they determine,
Right.
you know how that
No,
works? Yeah,
yes,
okay, all right.
understood.
Because I know there was a lot of confusion in the town about how that works.
Yeah.
You know,
no, so my question was regarding, is this just municipal use or is this business and
Oh, no, it's
business commercial? Yeah.
It's not.
Yeah.
But then CAA
oh,
turned around.
well, it's residential too.
Yeah,
Yeah,
it's,
I thought you said just business commercial.
I was kind of, sorry, yeah.
I'm just
It's
trying to
town
clarify this because there's been a lot of yeah, okay.
So then they received another bill for $170,000 for the similar period, doing the same idea. So in the beginning of the year, Eden, Christie, and then Tom, town engineer, got together. They called NBC. What is this? How did this happen? And once again, it went from estimated usage to actual. So the town agreed to sign up with payment plans, so all the money was taken out. You heard Mike Mulder talk about that. The large bill, they extended over a period of 3 years. So at least the cash outflow was there. The smaller, the CAA, has already been paid, the 170. So that is why I see a big decrease. So the real thing is if we keep going status quo, the numbers are all in your thing, on what the average bill is, plus what we bill the residentials like you're talking about, we're on course to lose over $500,000 a year, $540,000, and that's just based on the estimates. So what are we doing? What is the problem? And no one really can understand where does the problem lie. So we met with Data Corp, we met with Tom, the engineers. This was the Friday after Christmas. And we're like, what is going on?
We did a request for proposal on RFP for a company to do a sewer analysis. Inflow notification. Where is this water coming from? Because we could see in Lisa.
So can I just ask a question? So the water is how you determine the sewer.
Correct for the residentials. For the residential billing, you get a water meter at their house, and then it determines what the sewer.
Right.
But then there's also things that flow into the sewer, and there's drainage as well. So it's more than just that.
So they are metering that also?
This company, yeah,
This company.
they're going to do a smoke test, so they'll put smoke through.
But no, that's to find a discrepancy, but we're just getting back to the bill.
Right.
Mhm.
My understanding, because I own commercial properties, is they bill based on water usage.
Yes.
So we are not,
There's a difference between what our meters say versus going out to customers.
water meter,
Water meter
Right.
versus what the sewer people are saying, the sewer meters. So we have a couple of problems. First, we don't know if we can validate the integrity of the meters that they're using. So that's first and foremost. When we did the analysis over 3 years, we're seeing huge spikes. We just had a huge drought. There's no reason for sewer usage to go up 50% or 40% in a drought if they're telling us that it's from, drain water or table water. So there's huge discrepancies that even our third-party company has no idea why. So we have.
Meters can malfunction.
Yes, exactly.
And this is,
Well,
so
this
to
was
clarify,
supposedly a new meter installed.
So we have
at the
to,
airport. So
so
we're,
there's a 3-part process. First is we have to validate the integrity of the meters, and that goes in part with this Beta Corporation. Then the I&I that they signed up for, the RFP, they're going to go through and they've got different meters, temporary meters, set up throughout the entire town. And what they're going to do is they're going to look at the readings from 1 to 2 to 3 to 4. Where are the big spikes? Okay? Wherever we see a big spike, then we can turn around and look at the infrastructure to see if pipes are broken, see if someone is going into the sewer without our knowledge or something along that path. We don't know. There's too many unknowns. So right now we're in a fact-finding mission. We're here to validate integrity of data. We're here to find out if there's any infrastructure issues. And that's gonna take time, that's what spring is for. And then we all have to come back together to determine, all right, this is what we found, how do we fix it?
And now for the meters though, are we paying for those meters to be validated?
We're gonna have to.
Because isn't that an NBC thing?
Well,
Shouldn't they be the
Right,
ones?
we're looking to, I talked to the town engineer today, we're looking to, new meters are expensive, so we're trying to figure out a way to actually buy our own and install it next to theirs. With meter pit 5 is the one near the Air National Guard base, and that's a big problem, that's NBC's, and that's where we're looking to put our own meter.
So to me, it's just, I need to clarify one thing. You are getting billed based on usage of water.
Or are we getting billed for outflow? Because
We're getting billed for outflow, sewer.
Where do they, I've never heard of them doing that before. They have a meter on the flow. How do they know that it's coming from East Granby? Like there's a,
Well,
there's
it's
a,
estimated, that's the problem,
Because-
so.
Because they probably say water in is water out.
Well, so what happens is MDC bills CAA, Connecticut Airport Authority, and then Connecticut Airport Authority bills us for that 1 meter. So that's what we have questions
and
with.
that is a sewage meter.
Yes.
Yes.
I have never heard of them billing based on sewage flow before. I've only heard of it of water. Like individuals, like I have multiple commercial properties, and they send us a bill every year based on our water usage.
Well, it's the sewer system, so.
This is the sewer system and the sewer infrastructure.
You're 100% sure they're billing you on sewage flow, not on water usage?
According to all of.
That's my understanding. I mean, we have.
That's why you need it,
a
yeah,
meeting
yeah.
Tomorrow, so, yeah.
Because I may be wrong, but I've never heard of that before. Yeah.
And how many locations are we being billed?
Tom is gonna, our
Yeah, the
engineer.
engineer is going to go into it in more depth, but that's just a copy of an invoice.
I think we should have one.
We have no access
This
to
is
the
a-
meters. When we need to do our billing, we have to ask MDC to give the meter readings for us to do the billing.
They should be able to give you a printout of the month by month.
And we should be able to have some sort of control over it as well and be able to read the meters at any point in time to match it against the bill.
But they should at least send you this, but do you know, are they all electronically or some guys find it?
I can't answer, I honestly do not know.
Do we
And
know?
that's what I mean, there's so many unknowns. It hasn't really been looked at and evaluated.
And
It's so many
sometimes there are
years.
factors when you work with a meter reading and they factor it up and they may change the factors if they're calculating stuff.
Okay.
Do we know why they're not checking the meter more frequently than every
Exactly.
3 years? That's a big concern to me because
Well, there's a lot of miscommunication and non-communication happening. We didn't even receive bills for 3 months.
We
from-
still haven't received the CAA
Yeah.
bills for the last 3 months. They said their meter was broken. So we haven't received
Yeah,
the bill
so
from October,
there's
November,
a lot of
December. So we did the
That we're trying to get to the bottom of. That has been this has been going on for years and years and years, apparently.
Yeah, and it needs to be cleared up because that started and there's a general narrative that's occurring in town that's unfair. Well, it's unfair to Jim because Jim walked away from this when it was just beginning. And if you look back, well, I just want to clear this up for the whole town to understand. This just started occurring in his final months of his office, and you guys actually came up with a plan at that point, from what I understand. And it's kind of snowballed. And a lot of this, maybe it is these guys are all of a sudden just throwing these bombs at us that we're not ready for. Because I'm looking at your chart here of billing. It's like,
Oh, it's all over the place.
so just to be clear to everybody here and to the town, this is a fairly recent, like.
My understanding from the town engineer, it's been years.
But if you look at the sewage deficits going back.
Yeah.
They were always there. Because we collected and we paid. We collected and we paid. So there was, and Kelly, you record it. It goes up and down, up and down, up and down.
Difference is
Yeah, I mean,
estimated.
it's been negative for many years.
Yeah, but it was never, it was $100,000,
Right,
200,
right.
and all of a sudden,
Less, but again, you were getting estimated bills. I think now what's happening is the MDC is saying this is your actual bill.
right.
So
But it wasn't a carryover from the previous administration, because there was actually a mailer to the town that blamed the previous administration for the problem. The problem is that MDC was not billing properly. They were estimating, and then they hit you,
Right.
and nobody in their right, if this was a residential, they'd be in court. They'd bankrupt somebody, you know?
I mean, you could see at the last two WPCA meetings too, we weren't billing customers enough either to even cover the cost.
We didn't know what it was.
Well, we did know. I mean,
Yeah.
our last tax collector actually figured it out, what we should be charging. So we have adjusted the rates. Everyone's paying what they should be paying. we're just getting billed an incredible amount of money. So, right, we're trying to just get to the bottom of it.
So
So
we
there
never
should
went
be-
back and charged for what we didn't charge for, right? So we were,
No, we
East
don't
Granby,
charge 2 years
We're
back.
not
Yeah.
billing customers.
yeah, so East Granby was left.
When you get a 7-time surcharge, you can't plan for that, right? I mean, but to be fair, it also isn't, who's in charge of MDC? Isn't there an oversight?
Yeah, we had. a
DPUC
meeting-
or something?
Yeah, we had a meeting with Public Works and the town engineer like 2 years ago, and then crickets. Then we had a Zoom. It's really difficult to get answers from anybody.
So the state rep should get involved?
Yeah,
And she has, there's no way in hell we should just be paying $1 million
Oh, I agree,
based on a surcharge.
but I want to find out what the problem is so we can go back.
Oh, absolutely, you gotta figure
And then
that
be
out.
like, wait a
Yeah.
minute, if these meters are wrong, then it's 100% back to them. But at least we still have a 3-year time span of where we're doing monthly payments where we can adjust.
But have we asked them why they haven't, why they went back 2 years for metering just now versus why they didn't? It just,
they
floors-
chose to go back until.
no, it just floors me
2020.
that they didn't check a meter for 2 years. That just,
Yeah.
that sounds negligent.
Yeah, there's this,
So there's something else. And I think before we spend money testing our sewers, we need to go back to MDC and challenge them on that piece of it and say, you increased our usage by 5x from June to June,
yeah.
and you didn't go back and check meters for 2 years. Something's changed, and it's your practice, not ours.
This is for the state rep and the town attorney to figure out. This is not a job for laymen in this group to try to work through. So the town attorney should be sending a letter to these people saying, this is completely unusual and uncustomary. This is not a normal deviance from, if you got a 50,000, a 20,000, whatever, but you don't throw a bill at somebody for 700,000. Oh, we'll work out a payment plan with you. Bullshit in plain English,
It ended up being about $1 million between both
Yeah.
companies.
Oh, it's obscene.
We
Yeah.
know we have some inflow problems, so I mean, doing a thorough investigation of the sewer system is a very good idea.
So to that
We
point,
have the grant.
but we also, just not to cut you off, we do need a consultant to look at the whole thing.
Yeah.
And that's something that I remember having this discussion with Jim before he left, okay? There was a need for a consultant to look at the whole plan because the issue is not now necessarily 100%. This is weird. This is something,
And the town is growing.
Data is the consultant who's
Yeah.
looking at
We
it,
do
so
have-
they're talking with MDC and they're,
well, they should make a
they'll be here
presentation.
tomorrow night. They are, they're at the WPC meeting tomorrow night.
Okay, but that's something that we're gonna get stuck trying to figure out into the budget too, so they should be. But my point is that it's a bigger problem. It's an old system. And one of the suggestions, and I don't know if Beta's gonna come up with this, one of the suggestions I heard was trying to work something out with MDC where they take it over.
But we
That's
have-
something we really need to look
We
at.
are, that is an option, but we have to know what the status of our sewer system is. So this is one of the steps.
Okay,
And the town attorney might want
So
to
that's
take a look
what
at
they
to see
do,
if they gave us some bills to, so we would find them. So you have to think of that as well.
yeah, they wanna know what they're buying into.
Right. Right. They don't want to take over a system that has a lot of issues. On the other hand, it might be, if it doesn't have a lot of issues, it might be worth it for the town to just keep it and fix whatever the problem is as soon as.
But we can't speak intelligently about it because we don't know what it is.
We need to evaluate and come up with a plan.
Yeah,
But,
that's
yeah.
what we're doing.
Do we know if
So
any,
we're in the beginning stages of that, and actually the I&I is already set for the spring. They were gonna put the first meter in for validation in January, now it's gonna be February, just because we met, as I said, the Friday after Christmas, so it was a little hard to get people going right away to do that.
Brown's
do we
frozen.
know if any other towns that are customers of NBC have had similar experience? Any,
I can't say that I know off the top of my head.
might be worth finding out.
Yeah.
Do they have a similar thing happen? And how to go for them?
Like I said, the town attorney and the state rep should be calling the
Our town attorney was on the Zoom, the initial meetings with NBC, but
That was in January, right? That was in January when we first got the bills, I believe, looking at them.
yeah, and then helping us with the payment plan.
the pick.
He gave me options of not paying them, but those were worse.
Well, we need to get to the bottom of it, but the state rep should be in the office of the DPUC tomorrow, or calling them, at least put a call in and say, we got a problem here. They just whacked us for $1 million. That's a problem. That's bad management. They're charged with running the utilities of this town or this area. And then you need to find that out, and then call in a state senator too. I mean, they've got gravitas down there. If they pick up the phone, people will call them back. But this is not something that, it's not proper management of the utility. I mean, it's just like,
It's impossible for a town to manage.
Yeah.
Imagine if you, as you said before, residential, you just turn around, you're getting a bill 3 times what you normally would get, plus back charge of 2 years?
well, you guys don't even know what you need to increase the bill to
No,
cover your expenses.
because we don't know what is the
Well,
infrastructure.
for residential DP,
Well,
yeah, we can see, I mean, a lot of residential customers are paying more than they really should be. But it's the way it's set up. They pay for a certain amount. They might not use that amount, but they still.
they have like a minimum gallon usage, if I remember correctly.
Right.
Well, if it's a third of what we're supposed to pay, nobody's paying enough at this point. You know, we got way.
What happened, looking at the sewer fund charts, what happened in like March of 2024? I was like looking at that and there's like this expenses by month. There's like
We don't know.
the huge
That's
spike.
exactly what we're,
Well, that was where the surcharge, you got bills.
oh, yes.
Yeah. They got a big bill.
So the bill came for almost $800,000.
710.
And they offered you a payment plan. They're really nice, aren't they?
Well, we offered it.
Well, you get, it's ridiculous. Yeah, somebody's got it.
We don't have any answers, and
No,
we don't have answers, but we do have a plan in place. So, and that's what we can do right now. We are tracking usage on a monthly basis. We do have a third-party consultant looking into it. We do have a plan study in effect. You know, we're trying to put our best effort forward. You know, we don't want this expense, and we know that the town needs to understand it. We need to understand it. So hopefully we can get those results.
I think we should keep this on our agenda until it's resolved.
Yeah.
You know,
Any other questions, comments about sewer fund?
So, on the action plan, can you point me to where it's talking about the outflow study? Because I'm seeing,
The
Temporary.
INI,
what was that,
INI, number 2.
number 2? That says inflow and infiltration, that's.
Yep.
So they're also doing outflow as well, because that's where we're getting, okay.
Yeah, they're gonna put like smoke things up, and they're gonna test all the different meters and what is the meter usage from this meter to that meter, looking for spikes. Is there a broken pipe? You know, something.
But those are all inflow, that's water coming in for
And it
usage.
goes out too.
Yeah.
Okay,
Yeah, because it could be coming from the inflow, it could be coming from, like, during a heavy rainstorm, we'd expect to see it with inflow and infiltration.
if you had a really bad crack, yeah.
Big roofs, or if it's going to storm drains where it's not supposed to be going into, or it's
Are we paying
supposed
for
to go into storm
groundwater?
drains. Yeah,
Mhm.
or is it going into the sewer system?
I still need clarity on the flow. I mean, are they really billing us on sewage? And if that's what they're doing, I'd be more,
You saw the invoices. All it says
Yeah.
is gallons and CCS.
I'll give you a perfect example. I got a huge sewage bill out of Property Island, okay?
Yeah.
The reason was one of the toilets was stuck, so it drove the water bill up to like $1,000 a month, and that drove the sewage bill up. I've never seen
Yeah, I
it
think
really.
it's just water, actually, because it's going in, because that's why we're testing the storm drains, because where's the water coming in? Sewage doesn't go in storm drains.
No, but somehow it's getting into something that's being metered.
Right.
Are you checking the storm? I don't know.
Let's wait for the
It
end.
sounds
like,
yeah, they're doing a lot.
So they're having a meeting tomorrow night? Oh, okay. Is that gonna be recorded?
Yeah.
Oh, good.
5:30.
I mean, it's not my area of expertise. I saw the numbers were out of whack, and we looked and what can we do to fix it?
It's great.
I'm not a sewer
All right.
design.
Anyone from the MDC helping or trying to explain? Aside from the building department, the installer.
Even there, hard to get.
Data's working with FBC. Yeah.
So if we find an issue on their end, can we recoup the costs that we use?
That's what attorneys are for.
Yeah, 100%.
That's why there's attorneys.
All right. Anything else on the sewer fund?
I'll give a call to Skimmy tomorrow too.
Paul Kissel, too. He knows a lot of people.
All right, we're going to move on to 8C, review capital accounts for potential closeouts. I put this on there just, I know last time in the budget cycle, we talked about looking at capital accounts a couple of times a year. Is there any?
I don't have the closeouts today,
No.
but I might next month. A couple people have been out on vacation, so. I think there'll be one or two, but.
Yeah, what jumped up here, like, yeah, if you would check like the police body car cameras had $240 left.
Yeah, I mean, I should
From
be able to
21.
close that one, but
Missy, did you guys have a chance to look at it?
We did.
Anything coming up?
We do. Actually, Mary will give you a sheet here. 4 items that we proposed, please.
Thank you. All right.
One is in the amount of $2,700 for
Thank you.
his food removal. One is for iPad protective cases in the amount of $2,205. These amounts are to go back to the town, what's unexpended. We had our Santa Claus bathroom, that's $40, that can go back to town on that one. And our view boards, $9,234.50. Those are the 4 highlighted items on that sheet. And then I projected out what we expect to close in June, and then probably September.
Okay.
Do you need a motion to accept these? We need to make a motion to accept these? Yeah, I guess so, right?
yeah,
No,
yeah, they go to town meeting.
not to close them,
No, that's,
right? When the initial
I
motion.
think they do,
Oh, yeah.
because I was looking at last year.
Okay.
really?
You know, yeah, I think you're right.
We don't want to have a meeting.
No, I mean, we don't have
go
to.
to town
Yeah.
meeting.
It does. Okay, well, we don't need to schedule a
We'll
town
get
meeting
capital
for this.
requests.
Yeah,
Yeah.
but, so I would need a motion to move for town meeting, the closure of these 4 accounts.
Second.
And the return of the,
First.
return of the funds to the,
Return the funds to the general fund.
capital.
Capital.
All right, so Mike, you made a motion.
I made the motion, yep.
Second.
Any discussion?
We close these out at town meeting, is that what you're saying?
Yeah. Well, they do.
It usually is just done in June, and then all the closures go to capital. I mean, go to council.
I still thought we voted on, it. Like at the end of the year, we closed a whole bunch of stuff. No?
Yeah, you vote on them here. And then
Okay, so we should vote on it.
Correct.
Oh, okay, all
And
right.
then
But the
whenever,
motion is to go to town meeting.
Whenever it comes up. Yeah.
yeah, we won't schedule a town meeting for this, but if there's one, and we won't throw it on the budget town meeting, but whenever there is one, okay. All in favor, say aye.
Aye.
Aye, opposed? All right, thank you. Let's see, the next item is to discuss budget drivers. So where are we? So we're just a quick overview of the budget cycle. We're going to hear about budget drivers today. In February, we're going to provide operating budget guidelines to the boards. In March, we're going to hear the proposals back. And then in April, we're going to provide direction for the public hearing. That's the rough model. We'll get, also in February, we'll get the grand list data updated. That's it.
Is she giving you any feedback on that yet? Grand list? Yeah, is it good?
The grand list?
No?
I can go through all of it as part of my budget drivers list if you'd like.
I'll stop talking.
Yeah, we'll cover it in the budget drivers. Let's see. Do you want to go first, Missy? Okay.
May I ask, are you able to share a document with the board members?
Yes, there was an email that came last week that had a document.
If not, I do have some copies.
I could use a copy. I didn't print out for some reason.
Good, thank you.
I'm sorry, you want to? Oh, I'll show you. Thanks. Hey, good evening, everyone. I feel like we're just up here doing our budget.
The Groundhog Day.
It is Groundhog Day. So I'd like to share the major budget drivers for the 25-26 school year. You know, I kind of like to add a little levity to this process, and as we start our board education workshop, the process is actually pretty simple. It takes us no time to come up with a number. The challenge is where that number lands and where what we'll have to be able to put out to the community to support. So the drivers, we are a human person driven organization. Our largest driver is our human capital, which includes our certified staff, non-certified staff, and healthcare benefits. So for next year, we are projecting our certified staff with a net change of $669,400, which is a 7.5%. The most important thing to note here is that includes moving $400,000 in staff salaries out of grants into operating budget. Last year, we moved a number out of our grants. I think you'll recall that we have shared over the last couple of years, we have saturated our grants. This isn't a misuse of ESSER grants. We have particular grants that we are able to roll over year to year. Over the last number of years, we have utilized those grants, so we don't have it to roll over. So by way of example, $1.2 million in salaries, say 3 years ago. We have cut that almost in half. Okay, so we're actually working on these grants that we get every year because we don't have the rollover. So that accounts for about $400,000. Non-certified staff, we do have a couple extra paraprofessionals, looking at a net change at about $100,000. We hired a couple more East Granby paraprofessionals through our operational budget. And what we're able to do is reduce by a paraprofessional in who we hire through an outside sourcing company, which is much more expensive than hiring our own. So a number of years ago, when we renegotiated our paraprofessional salaries, we raised them slightly in order to, one, be above minimum wage, and two, be able to be more competitive because we have top quality paraprofessionals. And by doing so, we're able to hire a couple more, which is reflected in our operating budget, but we were able to reduce one of our consulting lines in which we've hired outside. Healthcare benefits, it's really early. We know it's still negotiated. We're always told 10%. I know some of our surrounding districts, one of our districts is, they're doing 26%. We're taking a bit of a risk, but we did a 6.6% increase for about $196,500. Of course, we're hoping that goes down. Sometimes we don't know until April or May, really, where we land with that. Tuition funding for alternative education programs. This includes a variety of programs, including special education placements, magnet schools, and tuition to our agri-science programs. That's an increase of $152,000 over current year. Transportation, we are budgeting for an additional school bus for just under $73,000. Utilities and fuel, we've estimated about a 6.5% increase. Student support professional services, about $140,000 over current. This includes outside service providers for our students with special needs. By way of example, board certified behavior analysis, occupational therapy, physical therapists, caring and care resources. These are positions that we don't have in our operating. They're not our own staff. We consult out for those services. We do have a budget driver, our subscriptions, books, and supplies. However, we are able to decrease that by about $60,000 for this upcoming year. Subscriptions sometimes run for 2 or 3 year. So we're in a year where we are at a liberal low, which is beneficial for this upcoming year. And then there's all other budget items in the amount of $2,184,000 or $150,000 above current. And those all other items include things such as employer taxes, workman's comp, unemployment. We've actually decreased that for this upcoming year. Operation and maintenance of our plant. Other salaries, stipends, athletic curriculum. So these are kind of our coaching salaries go into that line. Substitutes. We've increased our substitute line next year to align with our actuals over the last 2 years. So it's important to know in education, if we have a teacher that is going to be out for over 40 days, we are required by law to have a certified teacher. So as our earlier conversation, that is short-term disability. And if the teacher is out utilizing their accrued time, we are still obligated to hire a certified staff member to educate our children after a certain amount of time. So our line has been under budgeted for the last couple of years. We're bringing that a little bit more up to our actuals and comparing what we've had the last 2 years spent. Our legal fees are pretty stagnant from last year, current year. Professional services, we've added $50,000. That is the partial payment that we're sharing with the town for our school resource officer for the coming year. Insurance, property liability, equipment, professional development, travel, conferences, that makes up that all other umbrella, which equates to about $2,184,000.
How many certified and non-certified staff are there?
We're actually, right now, we are going to be presenting the budget a little differently. And by building, we're going to show the number of certified and non-certified. So we've actually been spending time with our minister just crosswalking that. I don't want to throw out a number. I would say it's about 90-something certified, 92, 91.
Mm-hmm.
And not everybody's a 1.0 FTE, so we're looking at full-time equivalency. So it gets just a little dicey, but about 92 for certified.
Okay.
So now the other thing I want to bring to the attention and a conversation is with our excess cost. So all of our budget drivers, and I'm going to put the percentage out there because here's where we are. But it's mathematical equation. It's a 7.3%. We estimate about $350,000 in reimbursement from the excess cost grant for the next year. We would like to have a conversation about netting that amount, which would then bring down our overall ask right now to 5.6. And then when the town receives that reimbursement from the state, it comes over to us.
So didn't we talk about that?
Yeah.
Already agreed to do that?
Yeah.
Yeah.
So if you see on this document, the ask at 7.3, if we net out the $350,000, now again, this is for next year, so it's based on students in district at the time, which could change. However, again, we're looking at current year, we're looking at, kind of the needs moving forward of the children we know, and expecting them to still be in district. We would estimate that we would get a return or reimbursement of $350,000 in excess cost. And, just to remind, excess cost is to help educate some of our children with, most needs. The state reimburses once you hit a threshold of 4.5 times your per pupil expenditure. The reimbursement is at a percentage. So it's not even a full average, but it's a percentage, which I want to say fluctuates between 60 and 70%, depending on district and year. So It's one of our biggest priority items with our legislators in terms of, fully funding our costs, but that would be the yes.
Well, that is, and if I'm not mistaken, I think that's with FY ‑25, right? So this
Right,
this year
so
is-
anything in excess of the 112,000 that was budgeted would get credited
Go
with
back
your
to you.
expenses.
Perfect.
But the first 112.
Which is new this year.
It is new
That is
this year.
correct.
Yeah.
Yep. So the first 112 will go into the general fund, and then the other back gets
Absolutely.
So just out of curiosity, what was the reimbursement last year?
332,500.
So you're in the ballpark.
Yes.
You're in the ballpark, yeah.
Yes.
Okay.
So they should have gotten 232,000
Last year.
credited to their expenses.
Based on our new
But
policy.
they ended up giving back money, so it ended up,
I mean, yes, so
We're still a
we're looking
little,
at about $500,000 over 4 years.
yeah,
Hopefully we get the governor's budget.
let's not do the 20-year.
I was able to go back, quite a few years, so. That will help us moving forward, because instead of tucking and looking for those grants, that 200,000 would have helped us current year budget and moving forward. So I think that's the practice that I would respectfully ask that we, work with.
So the only question I would have regarding that, we'll probably discuss it more when we actually decide, is we vote on a fixed number. And if we have a floating number as a return amount, how do you bring that to town meeting?
so my understanding is it's statute that they get the money anyway. There's no decision by the board.
Oh,
They
Yeah.
get the money.
I'm just saying
So
from a
there's
budgeting
no
standpoint, what we
actual,
present to the
like,
town.
option
Yeah.
for you. We just weren't aware that that's how. And last year was the biggest discrepancy year. So it's not like there was 250,000 year after year. It was always pretty close to budget.
Right, because they
So-
changed the percentages. even
Yeah,
though
so
there's-
last year was the first year, that's happened.
I got my head wrapped around that, but I guess the question is, what do you present to the town? Everything, and that includes excess cost reimbursement? Well, we can talk about that.
So
I
the
think I can
budget
answer
comes
that.
from the Board of
Yeah.
Ed, correct? The 112 came from like what they were budgeting at that time, and then there could be.
Right, so what the Board of Ed, to answer your question, we would net the 350, so just using these current numbers, the request would be the 5.6%, because we've taken off that 350, expecting that.
So it's already in call, yeah, okay, got it.
Correct.
Okay. So we can
So-
set a stat, a real number.
Absolutely.
Got it, okay.
Absolutely.
So I have two questions. One regarding that excess cost, and I think that the big piece that I think is worth answering is, if we had done this last year, then this year you would still be asking, if this had been done historically, the new budget ask would still be 7.3% increase. So if we give
Probably
you,
not.
but if we give you it this year, then next year, all we're doing is correcting an issue that's been previously going on. And-
What I think is really important, if we look at, our grants that we receive every year, we work really hard to get grants, but there's no grants except for those federal and state grants that are going to pay for personnel. So personnel really should come, we need to budget our personnel through our operating budget. And knowing what those grants are coming in, it's okay to roll some over, but I would like to prevent moving forward rolling over to the extent that we did, where we are kind of in the position. Again, if we were a district with a diminishing population, that would be one thing, but we're not. Are we going to be rising leaps and bounds by our data right now? I don't have evidence to support that, but I do have evidence that supports we'll at least remain, stable.
And that was the other piece that I was going to get to. I heard that our schools have grown significantly year over year from last year to this year by the tune of like 50 to 80 students.
I don't have that data right in front of me. 50 students over a K-12,
Yep.
Is actually kind of insignificant in terms of.
No, understood. But
Yes.
the point that I would be making is we as town residents, a lot of them look at it as cost per pupil.
Sure.
And 50 students is not insignificant as a percentage of our students. It's
Correct.
In your per
8%,
capita calculation.
70, and and that's before any new developments have gone online.
Exactly.
So, just from a cost per pupil standpoint, our cost per student is still, if we get this budget and the apartments go online and we get lots of kids like we might be getting, we're gonna have to absorb them. That's a risk that we also take, but it will drive down our cost per pupil in a sizable number. Even if we get another 30 students, that's still a 3% to 5% increase in our students.
Why wouldn't it drive your costs up because you need more teachers?
Well, because this is what they're budgeting for regardless. So that would
Fixed
be,
number.
yeah, we're not budgeting for the additional students right now. So if they come online midway through the year, I don't think Missy is gonna come back to us and ask for more staff. We'll have to cross that bridge in the following budget cycle.
You never know. If they're all in kindergarten, you might.
Yes, if they're all in kindergarten. The hope is that they're spread out.
Right now, we have no idea, who we will receive with the new bills.
Yep.
We will not know until they enroll. So we're doing some preemptive work, to make sure we're not caught like a deer in headlights should. As I shared with other people, we could get 30 children from grades 6 through 12 and spread them out. But if I get 5 children in grade 2, that's going to be more impactful and troublesome for us as a.
Yeah, since they're already out there.
Missy, I know the governor's budget isn't even out yet, but are you hearing anything that you should be reading or hoping for?
We hear a lot. I think in terms of the hoping for is the funding for special education. I meet with our representative and, senator to advocate as a superintendent group, boards of education, to increase the funding source for special education. I mean, that's 169 superintendents that are kind of struggling with this. I know it's in the Commissioner of Education's, asked to the governor. I'm not sure where it's going to land, but that would be probably the biggest hope. I mean, I'm not, anything else that comes along. I'm not thinking of anything right now that's going to be like, oh my gosh, I'm not sure how we're going to fund this as an interest source.
And any labor contracts going online next year?
We will begin to negotiate our teachers' contract.
Next year, but that would be for an FY27
That is
impact?
correct.
Seems like that just happened too. Did we just do that?
Time flies.
It does seem like you're always in a contract.
Any other questions for Missy? All right. Thank you.
I got one. How's the HVAC working out with what they've done so far? The high school?
Good. We still have some work to do, some control that we're waiting for. We're hoping to tie in our indoor air quality requirements.
Yeah.
Ray Carlson has done a great job with FNF. FNF has been very receptive to knowing what the changes and requirements are, so speaking of kind of unfunded and unexpected mandates, to work with FNF as they're working on that to install some sensors, for instance, that give us kind of real-time indicators on some of the air quality areas that need to be tested.
Cool. Thank you.
All right. General government.
Sure. You don't have to look.
So for general government, right now, we're still in the preliminary phases. As I said, I'm meeting with every department head, going through what they want, their expectations. My overall consensus is when I'm meeting with them is not to exceed 3%. So that is what I'm doing with them. But we do have new negotiation contracts that were signed this year. All of COLA is 3%. Correct me if I'm wrong with that, either in process or done. So that is the minimum of what's going to happen for wages. Is 3%. We, as the Board of Ed, we're still waiting for our insurances to come through. But what I really wanted to talk about was revenues and grand list and other things, what's going on with the state with grand list. So this is the first year motor vehicles are going to be valued at MSRP versus the value of your vehicle. So what that means is they're going to take MSRP and it's going to be a depreciation schedule mandated by the state. Well, before it was based upon the value of your car, and you could come into the BAA and say, hey, I have excessive mileage, my car is worth less, reduce it. That's gone away now completely. It's all on MSRP. Statewide overall average is about a 20% reduction in motor vehicles. Okay. In addition, they're also getting rid of some trailers and how things are classified. So what it's going to end up doing is shifting the burden of taxation away from motor vehicles. So in talking, our grand list isn't done yet, but we're probably looking around a 15% reduction in motor vehicles. So real estate and personal property is not going to be up to compensate for that. So I'm hopeful we might have a 1% total, but we have to wait for the assessment. But don't be shocked if you see a huge reduction as a direct result of motor vehicles. In addition, I don't know if anyone's heard about other veterans bills that's happening, which is great for the veterans, but it makes it very difficult. They are awarded totally disabled veterans certified exemptions, and they did exemptions on the dwelling only, but they forgot to put in the word 100%. So now even veterans with a 60% disability rating get the same amount. And they're not changing it because how do you give it to a veteran and then next year say, we're going to take it back? So the state is in a quandary. There's a whole bunch of pending legislation because they want to include the land now, where this year it doesn't include the land. So there's a lot of things happening, but this year it's any veteran with a disability of rating of 60% or more can get 100% of their dwelling on. And so that's a huge exemption amount that Mary will have to give. So
Do we know what that looks like in East
I personally don't. As she said, she's still doing the grand list. That's not due till January 31st to be signed. And I'm sure she always gives a presentation of what the grand list is going to be. But that's going to have a huge play on the overall budget impact and how we're going to establish our mill rate. But I do have some upside that I just want to bring to everyone's attention if we want to even open up that ground. Collection rate. Town does an amazing job. You've got great citizens. They want to pay their taxes. So I've looked at history trends going back 2 years. You have like a 98.5, 99.1. You're typically over 99% collection rate year after year. So kudos to the citizens of this town. So that's fantastic. But the problem is they're not getting rewarded for that. You have a budgeted collection rate of 98%. I would highly recommend that we change it to 98.5 for the upcoming year to try to offset the grand list depreciation, as well as we should probably look at the other revenues. The auditors pointed out you had over an additional $1 million in revenue from budget just in building fees and interest alone. So it might be worthwhile to take a look at that, because if that's an additional $1 million that's coming in year after year that we're not budgeting for, that could help offset the reduction with the grand list. As I said, I'm not the assessor. I don't have the numbers yet. It's not due January 31st. But I can tell you about what's the buzz around in the industry trends in the tax and assessment world. So just to try to prepare or help brace you guys when you plan everything. My goal is for the next meeting, February 19th, I am going to have a complete general government budget for you to review. So this way you guys can go through, and then the true drivers will be in there as well. But, it's your typical insurance, utilities. There's nothing outlandish that I'm coming across as a meeting with the department heads. The capital thing was the other thing. Can we move $100,000 from the capital budget to the operating? So I would be looking for a 3% increase plus the $100,000, but I'm taking it out of capital.
Questions for Lisa or Eden?
Trying to bring the overall picture together and how we can least affect the taxpayers to make the mill rate in line.
Yeah, I'm actually the chairman of the Board of Assessment Appeals, and I know that we had that conversation, but I'm not sure I follow the
assessment appeal?
Well, you just referenced the MSRP. MSRP is what we've always used.
No, you've done evaluation off the matter books. You have those yellow books. It's all been on valuation. So now it's straight MSRP. And that's to help the assessors so they're not redoing the vehicles.
But okay, so just to make sure we have our terms right, MSRP is the purchase of a new vehicle.
Correct.
So they're going to use that?
And the
Going
depreciation
down years
schedule.
before, and
In a set depreciation schedule. And the difference between that and I think it's not NADA anymore, it's something else. They came out with a new one last year. But that...
Dave Powers bought it out, but it was now.
Was it?
JD Power.
JD Power, that's right, that's what it was, yeah, because I've never seen it, I'm a car dealer. So, but anyway, so you're saying when you compare apples, when you compare the two valuations, there is a net 20%?
Throughout the state, approximately 20%.
Really? Wow. Okay. I would be surprised if there was something this year for reimbursement for lost.
There's nothing for this,
Not yet,
not yet.
but they did last year. Did they
That
not?
fell below the motor vehicle mill rate cap, that was reimbursed. Is that what you're thinking of?
Right, for the motor vehicle.
The 32.46. That's the mill
And that's
cap.
all they didn't, I'd be surprised because it's a change in policy. I'm trying to be optimistic here.
I would love it too. I
But
mean,
every every town's dealing with the same issue. And there's some
yeah,
towns that have a
this is gonna be
huge
the
motor vehicle.
statewide thing. And the only towns that are gonna do okay are those that are in a revaluation because they can kind of absorb this hit.
For the towns that have a lot of really inexpensive cars already.
Yeah.
So,
Well, and also they're losing a lot of trailers too. And when you're up in the northern part of the state, there's a lot more farmers than there are in Fairfield County. So, those come off the grand list too.
Yep.
Snowmobiles, trailers are no longer, so it'll come and go, but those are just big factors that are gonna happen. This is a long session, the legislative session, it did already begin, and there's a whole laundry list of stuff that is being brought up. But once again, we're not gonna know by the time we do this budget. We're not even gonna know.
We
by the
never
time
do.
vote on it. So we have to go with what we have at the current moment.
So do we know how much of a reduction, because if it's 20% of the valuation of motor vehicles, what percentage of our grand list is that?
it was a 1.9.
Last year, or recently, Donna suggested that dollar amount was gonna be around 400,000 to 500,000
Okay.
The reduction?
reduction.
Yeah, I would rely on what Ron
Yeah.
said.
Now, what I don't know is, at the time, was she thinking about a certain mill rate, so don't quote me on it,
But it's a significant portion of our.
yeah, motor vehicle is,
wow.
well, in the current year, 79 million, and the real estate was 696 in terms of grand list. So it's,
So
a little north of 10%.
it's 10% and then 20% of 10%, that's 2% reduction. So, yeah, I would have, yeah,
16 million,
4 to 500,000 makes sense then.
I thought she had said something about 1.6 million, but whatever.
We'll wait to hear.
Yeah, just to prepare you, but there are other revenues available that we should probably relook at too.
Yeah,
Collection rate, supplemental interest income is a huge one.
Yeah.
Kelly can speak to that. You've got your building permits. There's a lot of money that we've gotten year after year that this might be the year we have to put it in.
Yeah, I've jotted down, supplemental motor vehicle, looks like it's gonna be about 190,000.
Well, now, remember, for next year, I'd reduce that by 20%.
Oh, yeah,
Same
but
reason.
yeah. But I mean, things that I would adjust in the current budget to get an ending fund balance that's higher. One is we're gonna start with a little more than $500,000 increase to last year's ending fund balance. That just came in on the Treasury report. The supplemental income, a supplemental motor vehicle tax,
I
looks like
thought
it'd be
around 245.
245 increase.
No, total.
Total.
245 total. Like, I played around with projections, trying to keep the only
Okay.
rate as low as possible.
All right, so we were projecting 203 or something like that. So I stand correct. It's only about 45,000. Permits are way up. We can probably, but current year bump it up. Expected revenue by at least 125K.
Mm-hmm.
Interest, same thing. We can go up on that. So
And the permits also give us hope for the future. Those are
Well,
all,
we do have a lot of things.
Oh, yeah,
in the pipeline,
those are
too.
coming
When you
online.
talk to the building inspector, there's a lot of talk and, subdivisions going in, so that's a great thing for the town. You at least
Oh, yeah.
are in a town that's trending in the right direction, and that also will look good for bond ratings.
more so than most towns, actually.
Yes.
But those don't come online for us until their COs
They
issue.
get
So
ready to see.
they're getting close on some.
We're increasing, just from the sewer permits that we used to charge like $50 for, but we upped it to,
500.
no, it's like
But
1,500.
it'll also be nice to get the sewer infrastructure set up, so when we do have these new things come online, we can offer them hookups to the sewer and know what we need to charge them.
Right.
It all goes hand in hand.
all right, any other questions for Lisa?
Thank you.
You're welcome, kinda, sorta. Yeah, collection of prior years, I've got it 125, but if you want, I could put that in with my February 19th model. That's what I was gonna try to do, with the overall general government, just to see, give you guys something to play with.
Yeah, I'm gonna put it in, I mean, we can skip to the financial model, then go back to ADAP, but what I just read were things I have to modify in the model to get it ready for next year. So, our year-end funding, general fund balance from last year is now 500 grand higher than we thought. And I'll get all that stuff out of the treasury report, get it in here, and then those other adjustments. So those are all favorable, but we've heard the motor vehicle thing for sure, so.
Thing.
Yeah,
Also,
and
change your collection rate to 98.5 at a minimum.
So assessor comes to us in February, right, is it February 1st, the deadline is? So I think they have to report by February, whatever.
January 31st, the grant list needs to be signed.
What is it?
Yeah.
January
Okay, so I
31st,
was-
the bid needs to be
Yeah,
signed.
and Donna will
Few
be
days
here
late.
at our February meeting to speak to it.
So do we know what the estimated tax revenue or the valuation add to the grand list that those new apartments are gonna be adding?
It wouldn't be for probably next year anyway.
I thought some of them are coming online in March of this year. That some of them would be ready to go.
There's
Well-
four ready to go first.
We work off of the October 1st, right? So we'll be working off of whatever it was this past October 1st. So if it does
Okay.
come online, it'll impact the 27 budget.
And I don't know how it hits the books, but I know the assessment is on the previous year's evaluation. So I don't know how long it takes to actually get a tax.
January 31st would be based upon an October 1st evaluation, and the bills will be the following July and the following January. It's kind of
So-
3 years. Assess in 1 year, first bill the following year, second half installment in the third year. But if you get a CO that comes in throughout the year, you do an additional adjustment.
So it's immediate.
They do a prorated adjustment. I don't know how often Donna does them here, most do infrequently, but usually it ends up being like right around September that they would end up doing those adjustments. And it would count for this grant list.
So based on our calculations with we don't know what's coming online. We have well,
We have an excellent assessor, and I'm sure she's more than capable to explain it all.
I'm assuming it's gonna be, once complete, it's gonna be over 500,000 in new revenues.
We can't say that because you don't know what the mill rate is. You don't know what the assessments are, it's a little preliminary.
I'm going based on what I estimate based on the ones that they've built in Granby and how much it adds to our grand list versus what our current grand list. I'm just doing percentages backing in.
you could do a calculation,
Yeah.
take a little bit more.
And January 31st is going to be here.
10 days. All right.
It's
Anything
more
else?
money.
Yes.
Yes. Growth in the town, it's good for the town, it's
Yeah.
community growth.
All right, I'm going to move on to 8F, which, since I just did 8G, unless there's any other comments about the 5-year model. Request information from BOE. I don't know why I'm doing this in a meeting, but you think you'll send us non-educational costs next month? Is that right? Per what the statute quoted there? Thanks.
They're always enthusiastic about that.
We are the only county,
It's kind of like homework.
we're the only county request, most towns don't request it.
Okay.
They don't even request it?
No.
Isn't it supposed to be a state
You have to
statute?
request by the board of finance to do it, if you don't request, you don't do it. No other county.
Really?
Oh, very few towns.
So we are the model.
No, well, we thought we had to
State
when it first came out.
Is it?
Technically, the costs that we share are also shared already in our local.
Yeah.
To answer your question, yes.
Yes, but I'm
Okay.
not-
We thought we had to, when that first couple of years ago, we thought we had.
All right, so we will,
This is not,
Anything else we don't have to do?
all right. All right, I'm just gonna jot that down and make sure I look at this in the morning.
Actually, you can forget to request it, we'll be all set.
It's all automated. I just, last February's agenda comes up and the dates change and I'm gonna forget.
Sometimes.
Okay, monthly reports, so financial reports. So we did not have a meeting in December, so we have available November and December financials. I guess as we go through each one, I mean, focus more on the most recent, but start with Board of Ed on your financials.
Sure, I'll just, basically, I think we have October, November, and December in there, but I'll talk about December. There's really nothing out of the ordinary in any of the funds except for December annual object line 563 is our private school tuition. That's increased about 130,000 due to recent student enrollment. And we have probably about 95% of our is in our budget. Really nothing out of the ordinary except for the one item, the 563.
How many additional students does that represent?
One.
Any concerns, red flags at this point, Daisy? Okay. Any questions for Mary or Missy about any of the three we got? I can never remember. We do one motion on all the reports? Or,
One motion for everybody.
all right. General government.
General government, not much to report. We're still projecting to be down about 157,000 for the end of the year to come back to the general fund. We did have the 3% COLAs come in along with their retroactive pay, and we had a hazardous collection expense of 15 grand. Just because the forecast was straight line, it didn't allow for fluctuations. Next year, I'll incorporate more of the monthly fluctuations in there, but there's nothing crazy to report in the general government.
How's the dump looking?
I'm looking great. I broke it out the line item
Yeah.
for you moving forward on the forecast because you asked for the RCC
Yeah,
right
yeah.
now. So I broke that out. Ed was saying that he thinks some salaries of DPW should be or not allocated correctly. So he sat with Christie today to look at payroll because his departmental staff is split between RCC as well as DPW, and are they being allocated correctly? But overall, they're still saving money.
So one other question, I was talking to somebody in Granby, they get money for the fentanyl settlement? What do we do? Do you know where that goes?
Yeah.
It just goes in the general fund, or? I know we don't get a lot.
Right, so you have to spend it on certain things, so it's not in the general fund, it's restricted. And we've done like some drug trainings with Park and Rec. We were looking to get a drug drop box installed.
Is that on our report?
It's 14,000, Jeff, when you go back to? Right,
Oh.
around that.
We get
From-
checks for like.
From
Yeah, like the-
nip bottle thing?
Yeah, no.
No, fentanyl.
Oh, it's opioid.
It says
Oh.
none, so.
Yeah, I want to say it's somewhere around 14. And
Because I
we
know
have no
Granby-
idea, it trickles in. So like, we're not done. It's each company that they go after, and then they divvy it out
We
based on the
just got the
town.
NIP money check too, and that was pretty substantial considering, wasn't it?
Yeah.
What's it talked about?
What's that?
NIP money check?
Oh, for the NIPS,
Yeah.
the
That
NIPS
goes
go credited to the RC, because that also is restricted. You have to use that for like recycling purposes. So we just credit the RCC. We get that.
So the reason I was asking, I know Granby had used their money to get together with 3 other towns or 5 other towns on it just struck me, and this is a policy thing, but they signed up with, I think it was Torrington and Heartland, a couple other towns, and they funded a mental health response company to come in, so it takes some pressure off the police department. It doesn't sound like we have enough money to do it, but they were raving about how great it was, because basically it's providing a resource officer to go in when and they deal with a lot of mental health issues that they're not really trained or really designed to handle. And they were really psyched about it, so that's why I asked. Anyway.
That was looked at. And it was not a fit for our town.
Oh, you looked at it?
Yeah.
Oh, okay.
They invited us. It was something where they put it out to different towns.
Okay,
It was a lot more than what we had.
that's what I kind of.
And even just because when we have our meeting, Kyle's also involved in the meeting. So
Okay.
it was,
Okay.
I don't remember all the specifics, but we do meet the folks that would utilize the money, which is Park and Rec, Senior Services, Police, Ambulance. we do meet periodically to discuss what needs there are among. So those were some of the things we were working on.
So are these one-time payments as well? Because it sounds like their settlement's just a one-time.
Yeah, like,
So
so I think
how
after
would
when they go after each company, you know, like the state gets $1 million from X company, and then they have to divvy it out, and a lot of it is based on, you know, population and probably statistics of like drug arrests and things like that.
So I'm
Yeah,
curious
yeah.
how that crisis intervention would be funded in perpetuity or.
I think, well, no, I think that there's something that's like the big one was a SAC family, or whatever the hell they've signed on to do something somewhat permanent. Yeah, I may be wrong.
That I'm not aware
Because they were discussing it at one of the meetings in Granby. Just a thought. Thanks. Sorry.
All right, we move on to the treasurer's reports. So we got, November, December, and we also got today we got the final treasury report for fiscal 24. Anything you want to walk us through?
So I won't go over fiscal 24, like,
Yeah.
just incorporated with the
Sure.
statements that come through, with the other adjustments and such. There, not too much activity with, state revenue, as you can see. The couple items that are trending below, town clerk, I did talk to the town clerk, and she indicated, it's really driven by lack of land sales and house sales. That number is, pretty much driven by that, and there just isn't the inventory, nothing's selling. And then the not otherwise classified is going to be probably down for the year because that is to be driven by police revenues, and now the police revenues go into the police.
Oh, yeah. Okay.
So that's where those are trending.
All right, so we should,
That should probably get it. I don't know how it'll shake out by the end of the year, but that's really what the biggest piece of that used to be the police revenue.
all right, so we should make sure not to budget that. If we do budget for it at all. Okay.
And that's about it. I'm really good in the other one.
A question about the supplemental motor vehicle, because I was thinking about that with some of the other discussion. Do you know when those get paid? It's only sitting at 4%. I don't know if it's on the
bills
same.
just went out the end of December.
Oh, okay.
And they're due February 3rd, I believe.
Last day to pay is February 3rd. Technically, the due date is
Okay.
January 1st, the last day to pay is
Yeah.
Okay,
So
so,
it's similar with your second bill station,
okay,
but they don't go out for me.
okay, gotcha.
the end of December. Sometimes if you can get the grand list in early enough, you can go at the beginning of December. But with the holidays, it's tricky. Usually
Yeah.
the basic rule of thumb is if the taxpayers don't get it by the 15th, don't send it.
Right.
Just rude.
Right, exactly.
My opinion.
Merry Christmas.
Merry Christmas, happy holidays
Yeah.
for your tax bill. No, you can.
Yeah, we're budgeting not otherwise classified, just, 38, 39, 40,000, so definitely got to take that down for next year. Any questions for Kelly? All right, is there a motion to accept, I believe we have October, November, December from the Board of Ed. We have November and December from the Treasurer, and November and December from General Government. Is there a second?
I'll second.
Any further discussion? All in favor, say aye.
Aye.
Anybody opposed, abstentions? Okay. All right, Building Committee, I don't know if there's anything going on, Mike.
We're meeting tomorrow night.
All right.
And that was why I was asking her about it. Because sometimes she's there and sometimes she's busy. No, it's at the point now where they're basically as far as they could go with what they had and they're waiting for equipment. Am I correct? Yeah.
Okay. Board of Ed Budget Rep. Jeff, I know you attended at least one meeting. I don't know if you've been to any
I've
others.
only attended the first one.
Okay.
I think that they presented pretty much
Yeah.
what we had talked about in that meeting, so
Okay.
no surprises. I like the new format, how they're kind of showing a year-over-year compare where the money is coming from out of grants and everything else, so.
All right. Brings us to
And I do
public.
want to thank Jeff for the participation. I know one more meeting out, it's not,
Yeah.
usually a favorite of folks, but. You're welcome.
Yeah, appreciate it. Plus, it was short notice. I don't remember the exact turnaround, but
3 hours.
somebody was unavailable and you jumped in or something.
Yeah.
All right, public comment. Public comment. Yes, sir.
Good evening, my name's Paul Flynn. I live in Sunrise Terrace. I've got a couple different things, if I may. The first is, I used to be, a few months ago, the chairman of the Economic Development Commission. And during that time, we did I'm sure you're aware, we had a consultant create a village center master concept plan for us. And as part of that, they did a pretty darn good expectation as to what the impact is going to be of the additional bills. And it's in PowerPoint, so there's slides. But after they submitted the report, I worked with Goldman New York, and I actually have a workbook that's a very good projection as to what the impact will be of the 4 different building, four different ones. Takes into account the number of bedrooms, what the impact has on the school system, as well as revenue, personal property, taxes, and so forth. Would love to have a meeting and hand that off to somebody with that model would be helpful, because that came up a couple of times and it's very detailed. So I'd like to, I'd like to hand that off to somebody if it would be helpful.
Well, I'll
great.
feel free to send it to me.
Okay, I'd like to sit with this. Maybe I'll send it to you in an email and send up a meeting to.
And is Robin well?
Oh, yeah, Robin has a copy. So that's the first item. The second item has to do with maybe provide some advice from not the EDC side, but as a town resident. If you look at the town statistics, somewhere between the number of people who are 65 and older and those that are living below the poverty level, the percentage of people in the town that fit that criteria is in the neighborhood of 25%. It's a very large number. Keep in mind that the cost of living increase for 25%, 1 in 4 people in this town is 2.5%. So any tax increases above 2.5% is going to have a significant hardship on a significant percentage of the people in town. So I'd like the Board of Finance to keep that in mind as you're going through and listening to the different presentations from the Board of Selectmen and the Board of Finance. 2.5% is really the target. As concerns the school population, so there's a state report that's called the District Profile and Performance Report. And it's a very good report. You can look at it for any town in the state of Connecticut. And there's a couple facts that I think are important to hear tonight. The first has to do with the population of students. Jeff, you mentioned your concern about the growing population and the impact that will have on the school system. If you look back at the 22-23 school year, there was 864 students. In the 23-24 school year, there was 825 students. That was actually a reduction of 39 students. So that's directionally correct from a tax and cost point of view. So I think that's important because that represents a 4.5% reduction in the number of students between last year, 2 years ago, and last year. I don't have the data for this year, so I can't speak to that. But at least in that regard, there's headroom, if you will, for 39 students that would get us back to the fiscal year 22-23 budget. So there's definitely some headroom there. In terms of headroom, going back a little bit further back in time, in the 2009 school year, it's actually when the town of East Granby reached the maximum number of students, which was 907. So the buildings and so forth in the town of East Granby should be suited for a student population of 907. Probably some changes that have happened since then, but just as an order of magnitude, that's 82 students in addition to what we have now that we should be able to absorb. Now, I know the Board of Education's moved into one of the schools and so forth, so that there's things that need to be considered. But from my point of view, if you just look at the sort of the cold hard facts, there's not so much an emergency from my point of view when it comes to number of students. So I'm glad to share this information, but it's available at the state level. So that's really it. The big message from me is the 1 in 4 residents in this town are going to have a 2.5% increase in their income. So any tax increase above that, it would be significant. And I'll reach out to you. Thank you all.
Just a quick pause. Is that the COLA for this year?
No, I don't have this year. This year is not published.
That was what, 2024?
Oh, I'm sorry, 2.5. Yeah, COLA is right. Yeah, Social Security is 2.5.
For 2025?
Yeah.
And 2024 was what?
3.4 against a tax increase of 11, whatever it was.
Right, okay.
I mean, it was in extenuating circumstance because of the.
Yeah. No, I'm curious.
If you look at the individual budgets, I think the Board of Selectmen was 3.4, something like that, and the Board of Education
5.87.
Yeah, so we've had a couple of years now where we're really getting pretty good hits.
So one thing that I've mentioned before, and I think it's worth discussing, is looking at the rebate threshold for those who are in that poverty line, seeing if we can increase that credit to reduce their tax burden. Because to your point, there's a lot of people who can continue to make income and generate it in other ways to help the elderly or the less fortunate.
One of the other hats I wear, I work over at the food pantry in town, and we have a couple of our clients that actually work in the Board of Education, but they're still require additional help. Absolutely.
It's always great to think of health, and I support that, but just remember when you do, you're not reducing any expense. All you're doing is shifting the burden of taxation.
That's what I was saying is, yeah, if
So
you're
keep
moving,
that all in mind when you do make those shifts.
Yeah.
Someone's paying for it.
Some people can afford it.
yes, that was exactly what I was,
I'm always okay with that.
the point that I was making is I'm okay because I have 3 kids in the school system. I'm okay paying more in educational costs, and I'm okay absorbing some of the less fortunate to do so as well. So,
Could I have your address, please?
We've talked about that for a long time.
Yeah.
But I think that comes from the Board of Selectmen.
Yeah.
They're the ones that have to set.
and I don't know if there's state mandates that say you have to
The
have.
only state mandate that I ran into was I thought it would be more, there's certain criteria you have to use to do that, like disabled veterans, seniors,
There's also
disabled.
a maximum amount that you can make.
Is there?
And a maximum.
Yeah, there's a threshold. There are a lot of rules to it. So,
Right.
Your own town one too. Certain towns have their own.
but it's a really noble idea.
That's 50% of the town. Thank you.
Thank you. Is there any other public comment?
Jason Hayes, Washington Bridge. I just had some questions regarding the sewer fund. I know there's been quite a bit of lack of information in town and kind of wrong information in regards to what it is. It's a water bill, it's a sewer bill. And I think what a lot of people are understanding is that it's an in and an out. It should even itself out. Obviously, it hasn't for quite a while. And I think the biggest concern that I have is that it's gone unaddressed for so long. At this point, I had communicated with Eden and we had spoke, and I know that there was a loan or a payment plan that's been taken out 36 months to pay the 710. But there's still a deficit in that fund of $991,000. Where are the funds coming that are paying them $19,745.66 a month is the payment on the loan for 710. Where are those funds coming from? Is that being pulled from the in-out of the current sewer tax bills?
No, it's being pulled from the general fund like the auditor was saying. That was his restricted amount that he was saying.
So what we're doing is we're pulling that from another account that it shouldn't be pulled from to pay something before we've even looked into whether or not it's accurate or we actually owe it.
They're saying that.
Yeah, so that's a serious concern because I know that this was discussed. If we go all the way back to July 30th of 21, this was completely laid out with the plan with these numbers, looking at what could possibly be $100,000 deficit. And that was laid out with a plan, with suggestions, bringing in a consultant and looking at the formula for which we charge the resident and the industrial plus their excess water usage, which is how the bills were supposed to be regulated before MDC did this. I don't think that what we're looking at, obviously, is past administration or previous administration or this current administration being at fault what the MDC is doing. My concern is we still have a deficit of almost $1 million that has jumped to 991 in the last 4 years.
It's actually, what is it, 1.7 total?
Well, that's if you add the 710.
Well, that's still,
Yeah.
we're borrowing that to ourselves right now.
Yes.
We haven't like moved that out of.
And if we go through, because I've gone through the town's checkbook, and so if we go through those numbers, I can even give you some stats here. The second half of fiscal year 21-22, we only paid $262,000 to the MDC. The full fiscal year of 22-23, we only paid $319,000. So we're bringing in a bill from the MDC for over $450,000, and we're paying less than $320,000. Why was that not addressed in 22-23?
Because we got the bills in January 24.
Well, that's what we're looking at now. What I'm saying is these checks were actually cut and paid. So we actually had a deficit loss in 22-23 before they sent us the actuals.
We weren't charging enough.
Which is why I know in
raise
April of that year, you went retro, the WPCA went retro, and we upped residential to $350 biannually, and then $5.94 for every CCF over that, which is about 748 gallons of water. You get an additional hit in the sewer tax bill of $5.94. But the problem is, if we were already looking, we already knew before we got the actuals that we were still coming in at a net loss of almost $200,000.
We knew there was the town engineer knew there was an inflow problem. We just haven't gotten to the bottom of it yet. So now we're hoping to.
Which I appreciate, but it still raises concern that we've been looking at this for 3 years. So the 710 bill still doesn't address the 3 years of lack of attention to it prior to that. Because the 710 hit, they didn't go back 21, 20, they could have gone back several years. They only went back to 22, 23, which is this administration.
We don't know why they didn't go back further.
Which we should be great.
Didn't get me.
Yes.
We still got the.
My point, yes, yes. But my point being, but even with those actuals, we were still at a deficit of 200,000, and we sat here for over a year, and nothing was done. So now we're looking at, I mean, obviously, the numbers that we're looking at for the end of this year are not, our payments haven't gone through as the bills are just coming due for this year. But we're still looking at almost $1 million, and we still haven't accounted for how we're going to pay the 710 loan. That should be very concerning for both the Board of Select and the Board of Finance moving forward.
Yeah, which is why, I started bringing it up, and now we're trying to come up with a plan.
Once we get the solution, or what the problem is, then come up with a solution, we probably will have to go to bond, but I can't speak for everybody, but that's what we're probably looking at to do.
Yeah, but I think that we need, as a town, we can't wait 3 years to bring it up.
No,
We
I
can't.
agree. You're the
Because
540.
if what's forcing this conversation is the actuals and that the large hit for 710, we should have had this conversation for the 650,000 that we couldn't recoup out of that account prior to this hit. So this hit is just a second insult. The first hit should have made all of this happen.
Are you happy with the plan that we have in place now?
I am. My concern is that I don't feel we should be, the first step should not be paying more money to have the meters looked at. The first step should be a full sit down with legal representation.
Yeah.
MDC needs to show me, because they're telling us that they didn't send actuals for 21, 22, 23 because they thought the meter was faulty. Well, I don't need someone in accounting to send me an email saying, no, our meter was great. I need meter certification. That's the first thing our Board of Select should have asked for. Certified, I want someone to certify that that meter was correct. And now you want $700,000 from my town? You need to show me that that bill was accurate. And I think that's a reasonable request. If we're going to spend money, spend it with
I agree.
legal representation to ask the appropriate questions before we go and stick meters on something that we might or might not get an answer, because as we're looking at this spike, it's happened once. The other spikes are quite minimal if you look at that flow chart. I think everyone here has them. It's that 1-3 month. But I also think before we got that hit, why was the Board of Select or the WPCA not questioning, we didn't get a bill in September? We didn't get.
We question, we all, we're getting it.
But where are those answers? What were the answers? Why? I mean, I don't know anyone who's not going to bill for $750,000 for 3 months. Do you know what I'm saying? Like,
So I'm just gonna tell you, it'll be a cold day in hell when I vote to bond a sewer bill.
Yeah.
This ain't, you ain't getting this vote for it. We're gonna have to get to the bottom of it first, so.
Yeah. I think that, and that's I understand the plan.
Not to interrupt you real
I think
quick,
that
though,
needs-
one of the things that and I don't, it's public comment, I apologize, but I've had issues with meters before, and it's their job to come out and check it.
Right.
Have they done that?
They said they have, so, which
Okay,
is why
well.
we hired our own.
Okay, all right, fair enough, yeah.
So we do have a grant through DEP, the Clean Water Act, which is helping to pay for this study too.
Oh, good.
They're paying 55% of it. So,
Do we have a number for what this study will cost?
yeah, it's about 199,000, which we have that money in our sewer fund. That's from the permits that we bring the money in for. So we have the money to pay for that. And the only thing it doesn't cover is 32,000 for GIS mapping for it. That's not covered under the grant, but so it'll be about 110,000 that we get reimbursed from 100.
And what you were saying,
We cover every month.
Right, they find something.
and what you were saying earlier is even in spite of all this, it's probably something we should be doing anyways because our systems are old.
If we end up giving our system to MDC, they'll know what we're giving them. We'll know.
They're gonna take it blind. Right, yeah.
That'll
So-
probably cost us an
So
additional.
that, yeah, so this,
Which might be worth it in the end.
It's worth it.
But I still stand that there's serious concerns that we're still not looking at the nearly $1 million that this fund is in deficit. 991,000. Obviously, we have the payments that are coming out for the past bill cycle that have not been paid yet, but that's still a significant amount that we just keep growing and looking the other way. And the catalyst for this conversation should not have been 3 months of no bills and a massive.
It was, I mean, we worked for the last year to get this RFP out and get this company out. So we haven't been ignoring it.
When the auditors noted it,
Yeah.
we're bringing it up.
I had conversations with the auditors last year.
Well,
about
it has to be rectified, but I mean, going back, it's not been on a single Board of Select meeting notice or public comment. And I think that, but right now, we're looking to spend 1.7 million. We're pulling money out of the wrong fund to pay $710,000 that we possibly don't even or shouldn't owe. The taxpayers of this town should know that. We should have known that before tonight. That's my point. Thank you.
Any other public comment? All right, I'll entertain a motion to adjourn.
So moved.
For a second? Second. All those in favor, say aye. Aye. Opposed, abstentions? Motion carries. Thank you.